Hey guys, good morning. Welcome to the live session with Stocks Network Trading. My name is Dave, guys. My partner's Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey guys, welcome. Good evening. Thanks for joining. Give me just a couple minutes and then we're going to get started, okay? Let's have a good session. Let's have a good night. We're going to go till 8:30, then we got to wrap it up, okay? So we're going to go for a good 2 hours.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, welcome back to Stocks Network Trading. My name is Ron and my partner is Dave. It is 6:30 p.m. Eastern and it is still Tuesday, December the 3rd. So thanks for joining me again. If you guys were on the earlier session with us, we hit one good trade this afternoon. We learned a lot, we observed a lot. So hopefully everyone learned a little bit about the importance of top-down analysis, establishing some points of interest, establishing your zones, and trading with a plan when price action gets to those levels. All by managing your risk at the same time. And if you just follow that recipe, it could develop into a recipe for success for yourself, and you can do really well going into the future, okay? So let's test our theory again today in a different session now. So we can test all of our trading styles in London, in New York, post-New York like we did earlier, or even in the Tokyo session. So, but we're going to be looking for the same thing. Nothing is going to change. The only thing that's going to change is the type of volume we're going to see, maybe the volatility, and that's all it. But when we start to see that volatility starts increasing the market, when there's more volume, then all we got to do to go with what's going on is just start adjusting our risk and adjusting our position sizing or our contract or lot sizing, okay? And let's see what we can do. We're going to be focusing on gold tonight. So we're going to wrap up the call right at 8:30. I got a few things I got to do right after 8:30. So we're going to go for a good solid 2 hours. We'll do a good thorough top-down analysis. I can answer any questions if you guys have anything, and then we'll see how we move from 7 to 8 p.m. Futures market will open up at 8, and then we'll run it till about 8:30. And then if you guys are going to continue to trade after, at least maybe I can help you out with a little bit of charting and things like that, okay? So how is everyone doing? If you missed us on our earlier call, that's why we're doing this bonus catch-up call. And also, this is our third session live at SST. Dave also did a morning session from 8 a.m. to 10 a.m. This morning too. So shout outs to Big Dave, also handling a lot of live trading with the snipers in the Zoom Discord. And welcome to all of you guys. Okay, guys, so let's get into it real quickly. Let's see if we're going to walk into any news on our session. So you see, today they've already released the ADP non-farm employment change. The private sector, pretty shitty. They shrunk 32,000 jobs from their week forecast of 5,000. So they had a really, really rough month of November. ISM services was released today at 10 a.m. Pretty good, above the forecast, above the previous month. Anything above 50 is a expansion in the service industry, so that's good. Crude oil inventories came out as well. If you're a crude oil trader, they were released today. And President Trump also back to back. He spoke yesterday at this time and he spoke again today. So right now, us going into this, all we have is some Australian news. That's not really going to affect us with gold, but if you are trading any currency pair, AUD, NZD, JPY, like the yen, this is the time when these things start to move because their banks are opening up at this time and trading at this time of the world. So I'm across the pond from everybody over here in Australia. Shout outs to everyone from down under. But where we are up here, it's our evening, and probably for you guys, it's your daytime. So your banks are open, your banks are trading. So this is how cycles move in the markets. Australia, New Zealand, and Japan start the sessions. They open up, then all of that volume comes into Europe. We move into Frankfurt, into Switzerland, into London, UK. From there, it moves into New York, then in Toronto here in North America, and then we completely go over this cycle Monday to Friday, 24 hours a day, and then it shuts down Friday evening and for the weekend. But that's when we can pick it up. If you guys want to continue to trade on the weekends, that's when we can start to do some crypto, and we can start trading crypto on the weekend. So you can basically trade 7 days a week now. And they are starting to talk about getting the stock markets open up for some weekend trading. That might happen in the near future. So if that happens, then come up with a plan, guys, because you could literally be trading 7 days a week. I don't advise on that. Hopefully you guys are enjoying your weekends too with your family and friends. You don't want to probably be staring at charts 7 days a week because you do need a little bit of a break. It's just like a job. You know, just like when you go to work on your Monday to Friday job, when the weekend comes, you're probably glad that your job is over. And the last thing you want to do is work on the weekend. So similar with traders. Traders that are working every single day in the markets, Monday to Friday, they like to enjoy the Saturday and Sundays off too. And Justin, your wife would kill you too, as would mine as well. Unless it's a late night session, like I don't mind coming on here the odd Saturday night. Having a smoke with you guys, watching Bitcoin on the when you know the kids are in bed and things like that, or we're not doing anything. But I understand. You know, if you have a family, that's family time too. Okay, guys, so we don't have much news. Tomorrow, just heads up, if you're going to be trading, we have our weekly unemployment claims. Tomorrow, we're back to regular scheduled programming. The U.S. government is back open in business. So every Thursday at 8:30, we're going to start to see our weekly unemployment claims released. Okay, so not much news tomorrow except for that. And earnings, we had CRM and Salesforce and CrowdStrike report in the after hours just a little earlier. So right now in the news, Wall Street shifts the AI narrative from a bubble to an air pocket. So remember when all of these analysts were saying AI is getting extremely overbought, it's a bubble, it's about to burst, things like that. Now they've switched their narrative to an air pocket now. So two of Wall Street's biggest firms argue that real spending and earnings support AI's stock market rally. So, you know, maybe that's what the doctor is recommending is next week we have a little Fed cut and printing of money and a big injection of trillions of dollars in the quantitative easing, and we might see stocks rally again to new all-time highs. So that's exciting. Let's keep our eyes on it. Let's watch how things develop over the next week. Stocks swing higher as ADP surprise fuels the Fed bet for that decrease in interest rates next week. We've got FOMC coming up next Wednesday. And then what else is in the news? This is in the news. This is Haskett. You're going to get to know this guy's face. He's the man that's set to replace Powell at the FOMC head. This is Trump, Trump is appointing him. So bond investors warned U.S. Treasury over picking Haskett as the Fed chair. So this might be our new Fed chair over here. And we might have to say goodbye to Mr. Papa Powell. He's been good for us retail traders for the years being. He is our grandpa. So I love Papa Powell. You know, he's helped stimulate the markets and help a lot of us make some money. But even this guy might be even better. You know, if Trump says keep putting interest rates down, this guy might follow. And when interest rates go down, historically stock markets pump. And you guys probably can trade a bullish trending market as opposed to a bearish trending market. So it's good for everybody, except for inflation will increase and your shit that you buy in everyday life, like groceries and all of those things, they will cost you a little bit more. But that's how the world works. So hopefully we're making some money in these markets to pay for those things at the grocery stores. Salesforce, CRM, was one of the reporting securities in the after hours. The stock jumps on an upbeat guidance. American Eagle had a big day today. They were up 15 to 20% on their earnings the other day. What else we got? Trump met with NVIDIA's CEO Huang on export controls. So Trump is meeting with the CEO of NVIDIA. Who knows what's going to unfold there? If anything positive comes out, we might see another push up for NVIDIA. Larry Fink, if you guys don't know him, he's the CEO of BlackRock, softens his crypto stance. So his thought process has evolved too. BlackRock is up 4%. Bitcoin was up. Bitcoin is rebounding. It's not pumping back up, but maybe it's got to come back and test that 96,000 to 100,000, and then maybe we consolidate there around that psychological 100,000. We had the all-time highs at 126. It dipped down to 80,000, kind of found a little bit of support and bounced back up. Where it's trading from 90 to 93. Let's see if maybe the bulls can take it one more step up to 96 to 100, and maybe it can cool off at 100,000, and maybe we get that next push up testing the all-time highs, or it's going to retrace back down and kind of maybe check a double bottom at 80,000. So that's what we got to watch for crypto going into the new year. And lots of news, guys. So keep following your news, your day-to-day news. Guys, there's a free Telegram channel. There's not much viewers right now on this session. I know it's late for everybody. We do have 100 viewers on YouTube. There is this Telegram channel. It's pinned at the top of YouTube for you guys. Here's our link for our Tokyo sessions, our links for our New York sessions. This is Dave posting. So if you guys want to see what Dave is doing with the snipers in the Zoom, taking trades in there, live educating too. Dave is another coach here at SST, and doing a good job with the snipers there. And guys, we give you guys shout outs as well here on YouTube. We respect you guys as well. And doing a good job here, guys. So Cyber Monday and the Black Friday deals are expired now. We tried to give you guys extended time to take advantage, but we'll have more promotions going on in the new year. Okay? And finally, our website, guys, if you want some education, we got lots of education, and we'll be doing some brand new content going forward. So I might be limiting my Tokyo sessions now because I'm going to be doing more education. And then like to do 2 streams a day, it's a lot. So I'd rather just do 1 stream a day and then focus on another session, a couple hours to upload some education for the snipers in the group. I can do live education, or we can do pre-recorded sessions, and then I can just upload them on the website for you guys. And then you guys go with your own time and you guys educate yourselves. Okay. I like to use the live sessions for like Q&As and things like that. And guys, finally, we have a blog available for everybody. This is our SST blog. We like to release 1 or 2 or 3 blogs a week. We have daily outlooks. The last few blogs have been more about charting, importance of charting and trading right here. And then today's we talked about keys for success is don't trade, just observe. Some days it's just you and the charts, not trading. Set your MT4, MT5, set your broker account aside, and just once in a while, just go to the charts and just make some popcorn, grab a drink, have a snack. It's like watching a movie, and just watch. Mark out your levels and test to see what's going on. Is it meeting your criteria? Is it going against your bias? Hypothetically, would you have taken a buy there? Would you have taken a sell? You know, just watch what happens. Use a realistic stop loss if you are gonna, you know, like kind of back test yourself. Do what you would do in a real environment with a real account, and get better at drawing your zones and watching points of control, how they react there. And then it might help you get a better understanding, because sometimes when we just do this and we don't know what we're doing and then we just take trades, all we're focusing on is our profit loss. And if we go and draw down, we're panicking, emotions take over, and then you're barely looking at the candlesticks anymore, you're barely looking at the charts anymore, you're not even looking at your zones. All you're staring at is, oh my God, you're freaking out. I'm down $30, I'm down $50, I'm down $100, I'm down $200. What am I going to do? It's the end of the world. And you're not even, you're just losing control. Remember, when you're a trader, you have to be in control of the situation. Whether you are in a trade or you're not in a trade, you still have to be able to control yourself. And when you get in a trade, there's three outcomes. You can go into profit, and you have to be emotionally sound when you're in profit. I know it's exciting when we make money, but you still got to be professional about it. You got to understand that this is what you're looking for on a daily basis. So I know the initial excitement at the beginning is exciting, but after a while, when you keep doing this, it's going to become part of your job. It's part of your routine. And then you also have to be able to handle drawdown. There's going to be days where you're going to take drawdown, just like myself. There's days when I come on here with you guys, but you still got to remain professional when you're in drawdown. You can't panic. You still got to watch where your stop loss is. Is it coming down to your stop loss? Is there anything you can do? But prior to taking the trade, this is part of your trade management. You need to allocate a certain amount of risk prior to taking the trade. So when you take the trade, you already know mathematically how much you could potentially lose. When you know all of these variables, then it's just you and the charts and the candles. You've already allocated how much you're willing to lose. Like for this session, I'm planning on taking one trade. I've already allocated 0.25%, 0.25. Okay, I'm not risking 1%, I'm not even risking 0.5%. I'm risking 0.25 of my entire account if I do take a trade in this market today, and I'm looking for one trade. That trade can hit profit, I might make 0.25%, it might hit a break even, I might not make anything, I might not lose anything, and however, the maximum I can lose if a trade hits my stop loss today is 0.25%. Now, if I allocate that, if I lose that 0.25%, am I gonna freak out? Is that my entire life savings? Is it my entire account? Is it my grocery money? Is it my rent money, etc.? No, it's not gonna be anything, right? For me personally, maybe for you, 0.25% is a lot, but for you got to manage your account. I don't know how much capital you're trading with, but when we're talking percentages, 0.25% is the same percentage as if you're trading with $10 million, $1 million, 100,000, 10,000, $1,000, $100, or $10. It's the same percent, okay? And now that we've said that, thank you, Justin. Verbal disclaimer, guys, I am not a financial advisor. SST are not financial advisors. We're here to show you how we personally do our trading. Everything we do here is you are at your own risk. I have to risk my own account, manage my own account, as do you. We're here for education, entertainment. Hopefully you can learn something from us. We're good at price action. We're good at charting. We're good at understanding what you're going through as a trader because we've been through. I'm personally speaking for myself here. Okay, so when I'm saying this now, guys, I'm talking for myself. So I don't need a disclaimer now. I'm personally talking from experience from me. If YouTube doesn't like that, fuck YouTube. I'm telling you what I went through as a trader, and if you can relate to it, you're relating to me. I don't give a shit about YouTube right now. YouTube can cancel the channel. I don't care. I'm telling you guys, I have blown up real money accounts when I first started trading. I have lost lots of money trading. I've contemplating quitting trading back in the day. I had to take 6 months off from even taking a trade and thinking, do I still want to continue to trade and continue to feed money to the markets and lose money? But I didn't give up. What I learned was I didn't know what I was doing. First of all, I didn't know what risk management was. I didn't know what like the price action that I know today, how I knew before. I wasn't patient. I wasn't disciplined. I didn't have daily goals. I thought trading was you get rich quick. I was thinking about what color Lamborghini I was going to buy, all of these things. And nothing happened. I lost everything. Okay, so I'm getting it out there. But I've learned how to overcome that. So if you're going through a situation like that, I've been through it. Your uncle can help you. You know what I mean? This is where now I'm your uncle. Your uncle's giving some advice. Whether you want to take it or not, that's up to you. But I'm telling you, the way how you can become a better trader is slow and steady, patience, discipline, do proper charting, proper risk management, allow the trade to naturally come to your zone and trade off of that zone as opposed to just forcing any trades. If you're not trading at a specific zone, you're speculating. You're testing the waters. That's where I've learned over time, personally, myself, to use a feeler trade. If I'm not trading at a specific block in the market and I'm just trading like right here, right now, I might just test the water with a smaller trade. And if I get stopped out, it's not the end of the world. I don't even use that to go against my profit loss for the day. I basically don't even journal that trade because I know I'm just speculating. If I get stopped out, maybe I lose 30, 40 pips, but at a small size, it might be $3, $4. I can live with losing $3, $4. It's not going to affect me. That's like a price of a coffee a day. But if I do that same type of trade with a standard lot and I lose $300 or $400 in that same area, then that's going to be going against me as one of my losses for the day when I shouldn't even been trading in there. So that's where maybe you got to think of having an edge in the market and use smaller trades to test until it gets into your bigger setup, your proper A+ zones. Okay, does that help, guys? Sorry, but that's the disclaimer. I'm a very honest person, and that's my disclaimer. Okay, for YouTube, yes, we're not financial advisors. We're not here managing your accounts or anything. Everything you do is on you, but I hope YouTube understands that I can talk personal experiences. If they want to give me strikes or cut me off from that, then it just shows what type of shitty platform YouTube is. And then we still have Zoom and our Discord, and hopefully those things give us a freedom of speech to be ourselves and talk. Other than that, then I'm sorry, guys. You probably won't see me here on YouTube any longer. But let's get into this. Okay, so this is gold on the daily. We've gone through this chart every single day for the last 5-6 months. If you've been here with SSD for the last 6 months here, we've been talking about. Remember when we were trading all through here in the summertime? We dissected all of this. So that was a big bullish flag. Like that was entire months. April, May, June, July, August. Finally, September, they released all of it to the all-time high. So we are still trending higher, but we're getting lower highs from the all-time high. So, you know, the bias is still 100%. Gold is bullish. But there was some sellers in the market at the all-time high right here. So if you want to follow me with the top-down analysis, you're welcome to follow me. Some of you guys already have your charts done. That's amazing if you guys already have your charts done prior to me taking over. And you should know what I'm doing. Okay, so all I'm doing right there is marking the all-time high, right? The other thing that I can do is set myself up with an alert right at 50% of that box. Right there. So any alerts I place on the daily are yellow lines, points of interest. So right there where I'm placing alert, 4,355. If gold ever gets up there, I'm going to be ready with an alert. I've created it. That doesn't mean when it comes up there, I'm just going to blindly just sell, right? Because it could come in there and go down, but I'm not going to do it blind. I'm going to watch. When I get the alert in there, I'm going to watch how the volume trades in that zone. If I do see it break down, I will go into sell because that's one top, there's the second top, and they're dropping it back down. However, when it's coming up there too, I could also get an alert while it's coming up there, and it could be an alert telling me right there it's there. But if I sell, what happens if it's an impulse breakout breaking out? Then it's probably going to come after my stop loss and stop me out. So when it's breaking out, I got to understand that the bulls are strong. They're breaking out for a new all-time high. But then when this candle closes, or whatever the breakout candle is, I have to sit back and watch it. Will it be a fake out? Will it just come up here, a big blue candle, catch a wick, and then it pushes back down and then closes back in the red box? Then that could signal a sell the next day. Why? Because I see it came up there, spiked the liquidity, faked the market out, came back, closed in the red zone, and now sellers are selling it back down. So that could be option what could happen up there. And then the final third option is we get that bullish break, it's breaking out, but it's not a wick, it closes up there with big blue volume. So then the other thing I'm doing is now I have confirmed blue volume up there, they closed it. So then the red zone I'm keeping where it is, I'm just changing the color to green to support like a 5-minute box where it comes down for a pullback, and maybe this is where the pending buyers are now ready, locating themselves to buy a discounted all-time high pullback right in there. And if they get the respect there the way, then I'm looking to buy that to take it to meet that resistance for that new all-time high and break for a new all-time high, right? So I don't need to sit and stare at my computer until it gets up there. We're not even close to being up there, but a nice alert will help me I can keep my alert there, put no expiry date on it, and it's good to go, okay? So next thing I'm going to do is focus on this big bearish candle, because you got to understand, guys, are you getting better at understanding structural candles? Which ones are important than the other ones? Like right now trading in here, see this candle, this candle, this candle, this candle, this candle. See when there are these kind of spin tops with wicks above and wicks below? They are important candles, but they're just not important candles to maybe find points of control or cut them in half, because they don't have much supporting volume on the body. This one is important, this one is important, this one right here, this one right here, this one, this one, this one, right? It's the ones that have actual full big body volume, and they're actually doing something. They're actually closing above or below other candles. They're actually engulfing them. So right here where we had this blue day, a bearish day, a bullish day, but this one kind of canceled everything, kind of brought it all the way down there and closed below. So these are the type of candles you got to identify and start charting. Easiest way to do this, grab your Fibonacci tool, opening balance. So it's very easy. You guys should all know where a candle opens and you all know where a candle closes. Next thing we do is there's 0.5 on your Fibonacci right there. So see my yellow line, right? I'm cutting it in half. Put that theme song on. OT Genesis, Young Dolph. When price gets too high, what do? We cut it. When price gets too low, what do? You cut it. So you cut it in half, right there, easy. This is called the cut it strategy. And then what else do we do? If you want the 50%, you got it. But what if there's a little slippage? You know what I mean? A little bit above and a little bit below. So now you're getting the slippage, and that's what we call the point of control. If you want real technical terms, it's called the point of control. But if you want to call it like slippage, you're basically giving yourself like a spread, a little bit above, a little bit below, and that's what's called the golden zone, the golden pocket. When you're using a Fibonacci tool, that's the 382 and the 618. So that entire box right there, that's what's known as the golden ratio. These are mathematics that were created in the 14th century and sticking up until today. So we can't argue mathematics. You can see how mathematics works. So now this is kind of like back testing. Look at when gold came right back in, it transacted right there at 50%. And those block of those sellers were technically there to push it back down. But when they pushed it back down, they never broke this type of support down here. So it's got a higher low, and now it's coming up with more momentum, more volume. Now, if you stretch that pocket into the future, again, look at what happened. Last Friday, we traded in there. Monday this week, we broke out. Tuesday came back down, closed below. Today we were trading, was a bullish day. Look at it. It came right up again to that 50%, and they rejected and closed it below. Look at our daily candle. So we're below the red zone. So we could technically get more selling pressure to fill Tuesday's wick and drop even further down. However, it's open bullish, so it might continue to transact back in this red zone, but you got to understand that this is still a big red zone, and they could reject the bullish move and push it down, okay? So that's what we got going on so far. So stretch this zone into the future, and then what I can do at that yellow line, 4,238, add an alert there. If the volume ever comes back up there, we might get a lot of transactions up there. So right click, add alert. Maybe it's going to be tonight, maybe tomorrow, who knows? But I've added an alert. See my clock there? Clock there. I can continue to go down. Now you got to be able to observe, recognize. Big bearish candle, and then it tried to come back up bullish. It tried to come back up bullish, but we got lower high, lower high, lower high. So it's pushing down. That's telling me the sellers are pushing the offers down. They're pushing it down. They're pushing it down. And you can literally see that was a lower high from here. Next one was a lower high and a lower high. So these buyers could not push and fill those wicks to create that new higher high momentum. And then you can see how the volume is concentrated right in there. You can box it in. And what pattern is that? You guys should be able to recognize a bear flag pattern. Here's the big pole coming down, okay? Here's the pole, an upside down flag. There's the big pole. Here's your flag. If you're American, you're holding an American flag. If you're Canadian, you're holding a Canadian flag. Where are you guys all from? Poland. You're from Poland, you're holding a Polish flag right there, right? Wherever you guys are from. If you're from Punta Cana, Dominican, you got a Dominican flag right there. So that's your flag. And then look at how it proceeds with that big bearish engulfing candle, continuing to drop down, okay? So recognize your patterns as well. What we can do with that zone is you can continue to stretch that zone into the future. And the volume is still above, so it looks like a supporting zone, that flag. I can make it green. However, I'm just going to pull this one back for now because I want to kind of show you what's going on with the market. So you see this big leg push down? You see how it just stopped right there. It stopped and then it came back up, lower high. There's where it came down. That's where the sellers should have broke it and pushed it down. But that's where the buyers stepped in. That's called a double bottom. So when there's two bottoms, obviously it's better than one bottom. If we have three bottoms, triple bottom, 3 times is better than 2, better than 1, a quad bottom, so on and so forth. But a double bottom is your most basic pattern in trading. So there's your double bottom. A double bottom traditionally has 2 times more volume to break this neckline and continue to go up, which it did with that big blue candle. And look how high that double bottom extended to. Where? Right there to the point of control of that big bearish candle, and then sellers pushed it back down, but the sellers didn't have enough volume to pull it all the way down to see if there would be a triple bottom there or break it even lower. You see where the support is coming in? It's coming in at 50% of this blue candle right here, right there. It's holding, and then we're breaking back up where? Into that same red block. And so far sellers are still rejecting it down, but that doesn't mean that buyers can still buy and get it through here. But technically, we're not there yet, okay? So you guys following me? So now how I just complement that double bottom, place a yellow line right there. Body, 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 body. And you see how it cuts that blue candle right there, October 6.5? And if you want now a nice solid green demand zone, look below that yellow line, and all you have is that big bullish ignited candle right there. Now, if we extend it into the future, I hope you guys are doing this, extending into the future. I hope I'm not just talking about this shit every single day and you guys aren't doing this. Because believe me, when I learned how to do this years and years ago, when I was a dinosaur, it still works, guys. It still works. Don't tell the market makers we know this, but you keep this between us, okay? This is our little secret over here, okay? Let's not give them our edge, okay? Cool? Wink, wink. I'm just joking. This is, it's not a secret, guys. It's not a secret, okay? But it's just how price action and how auctions work in real life, okay? So I've extended these. How far into the future? Go as far as you want. Go into 2026. We're going to start a brand new year coming soon. Stretch these all the way. Yeah, right there. 2026. Go into the new year. And continue to watch these in the new year. I assume you guys are still going to be trading in the new year. We don't have quitters here. You guys are all winners. Yes, we go through difficult times in life, but that's what makes us stronger. Is the mic having some issues, guys? I got a new USB cable for it. So if the cable doesn't work, I know the mic is shot, then I'll get a new mic. I have another mic, but I just wanted to test if it was the cable or the actual mic. I just want to say something to YouTube. I have another monitor where I have YouTube, and I'm looking away from the mic when I'm talking to you guys on YouTube or if I'm answering any questions. So sometimes that's what causes the noise when I'm looking away. But if I'm talking like how I am directly at this screen, I'm talking like right into the mic. So, and I know Zoom doesn't have any issues with my mic. It's just sometimes YouTube. But I think it's when I'm talking away from the mic, answering your guys' questions. So I'm trying to figure it out myself. I'm not a streamer, okay? I'm going to admit that. I'm a trader, okay? I'm not a trader. So I'm still learning how to stream. Your Unk is getting good. Your Unk is not about technology. I don't give a shit about computers, mics, this, that. I'm old school. I barely can use a telephone. I know how to scalp on a telephone, but I don't even know how to use a call. I still got a beeper around my waist. Does anyone remember beepers? The Nokia flip phones? Yeah, that's what your Unk uses. I'm like my dad. I'm like an 80-year-old man over here. Okay, so continuing to get focused here. So I can use now points of interest. Daily points of interest are these. Look at that was like the neckline right here. See where it came up, back down, came up, back down, body's closed, back down. So that yellow line is a neckline for that double bottom. And then you can see when volume closed above, look at when it came back down to retest. Look at that wick there, and a wick there. So we're holding good support there. If you want to lower the block down to there, that's what I would do. Lower that green block right there, and then you got a nice little block right there, okay? So then you can now visually see how it came in there, back up, 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 and then it was gone. So if we ever do come back down, that would be a good block. Where? To place an alert. Exactly. Look at the price tag. $4,025.75. That is a perfect auction number. So knowing that, I'm going to right click that, add an alert. Yes, sir. And if it ever comes down there, again, I'm going to get alerted if gold ever comes down. I'm not going to trade blind, but we got a good probability it might bounce back up from there. It might come back down in here, produce a double bottom. And you know, same drill, same shit. Or it could break here, grab liquidity, be a wick, come back in, close in the green box, and then it's gone again up. So there's option A, option B. And then our final option is sellers are strong. They close it below with a black candle. Then we flip that green zone red, and that would be the centering point right there. And if it comes back in there and then they sell it, I'm selling down gold back down to this block, so on and so forth. If the sellers break this block, then where would it go? To my next identified block, which I think is, if I'm just looking, would be this bull flag right here. That would be my new block in the market, right? And then a cut point would be this cut candle in half, and there is a little bit of a fair value gap right in there. So I would just cut that right there, and that would be, yeah, 3,800, 3,796. See if it stops right there. If not, I got a block right below me, and you can visually see the block. It went a blue, black, blue, and then broke out. There's your bullish flag breaking out. So if it ever comes back in there, that bullish flag still might be pending. You guys got that? I know it's a lot of arrows. I know it's a lot for you guys. But this is also if you're trading on the 5 minutes. If I told you that these were 5-minute candles and they weren't daily, I'd still be setting up my chart on the 5 minutes and I'd be looking for 5-minute trades coming out of these levels. Okay? So let's just continue going forward. Now you see we came up, big bullish bounce, nice breakthrough. We came all the way up there, pulled back into here, still holding. So even if I want to cut this blue candle, cut it in half. We got good look at the number, 4,098.98 cents. I'm $1 off of psychological 4,100. And I just guessed right there. Ron smoked a nice big joint right before this call, and I can still do this while I'm, you know, if you don't want to see guessing, which we shouldn't be doing, we should be more professional. Grab your Fibonacci tool, open, close. Look at Ron. While smoking a joint, he's right on 50%. Why? Because I'm telling you, I do this for a living. I do this every single day. It's the same exact shit every single day. It's getting to the point where I can do this with one eye open, half asleep. You know, when people come on here and say, Ron, you look like you're half asleep, your eyes are barely open. Yes, that's how this should be getting for you. It should be getting that simple that you guys should understand exactly what I'm doing. Then if you want to find the point of control of that candle, again, a little bit above, a little bit below, and there's your point of control of that candle's volume of that day. Have we transacted in here? No. Right there, look at this bearish day. It came and it tapped right at the top of it and went right back up, a spin top, cool off, and it continued. Again, this candle came down right there. If you looked at 50% of this big bullish candle, because it's an important one, it closed above the previous candle's high. And if you grab that, similar, you would have seen it traded right at 50%, maybe a little lower to that point of control, and went right back up. And you got another spin top candle and another bullish explosion. So let's do it with this big bullish candle here, because this was now a closing weekly candle, Friday. Very important. And this closed off our month, right? So let's go from the opening to the closing. Let's go to 0.5 is right there. Look at where it tapped today's low, 0.5, and we're opening bullish ignited right above it right now. Okay, can we find a point of control of Friday's volume? Look, we are still trading in it. So I can see on Tuesday, it came all the way down to cut through, closed in it. Yesterday, we went all the way up, got rejected, came down, we closed bearish in it. Today, right now, when we get on today's daily candle, it's opening bullish ignited right now, but it's got a big wick to fill, and it's still trading in the big red zone above us, okay? So if the sellers reject today's opening balance and start breaking it through here, all they have to do is fill this wick and come down right here to 4,147, and we'll see if it holds. If it breaks, you got a body and a body right there at 4,130. So that would be my next supporting point of interest. And then finally, you got your zone below you. Okay, so let's continue to just look at what we see now. So from today's earlier candle we were trading, opened bullish, came all the way up. Look at where it tapped right into, 50% right there, and pushed down. That's a lower high from that wick. The red zone is still red zoning right now. So that's letting me know sellers are still there. They kind of offered to all of that big bullish volume today, and they pushed it down. They exhausted all of those buyers. They flipped the opening balance, came down there. That was the lowest point, traded right in that green box, and came back up, and look at where it closed. So now, when we're now following the volume going into the Tokyo, there was the closing opening price, 4,202. Bullish ignited candle. So that's my lowest point of the day. So I'm going to make it a purple line. That's representing the lowest point. It's basically the opening value of today's daily candle. And we still have 22 hours to go on this thing, okay? So this is real early. It's just, it's just opening up. Okay, so it opened and it came up and it's already momentarily got a high on it right there. 4,208, 209. So I can tell it's about a $6 move. So it's about 60 pip range right now, which is not bad, but this is a young candle. It still has a lot of volume to come in. So if we continue to come up and break our high, it might fill up to where the bottom of the red box, to 4213. That's $5 move from there. That's 50 pips. If it moves probably higher, then we're trading up our wick yesterday. And it's all the way up there. Are we going to fill this entire wick? Possibly. But however, if it doesn't, why don't we look at this yellow line and maybe like the bottom of this red box, and why don't we just cut that area in half? Why don't we just find the halfway point like right there and make it yellow, just to let us know if it does come up bullish, that's where the sellers might be there, holding it down, producing a lower high, and pushing that wick back down. So how did I identify that? Let me show you with this. So go to the yellow line. We've already identified that was yesterday's high, and bring it down to where? To the red zone, right there. See, Ron smoked a joint, and he's still spot on where he guessed to put that yellow line right there. Okay, so that's going to be a point of interest. So if we see today's daily candle coming up, big blue candle right there, I'm going to assume there's going to be sellers there at 4227 to, try and push it down. If it can break through there, then we're coming up to the opening balance of this daily candle and maybe filling up the rest of the wick. And then it's very bullish if it can continue to cut through there, okay? So it's really bullish right now. Let's go to the 4-hour. We're not going to see much right now, but we can see earlier how it's trading. Look at how this traffic jam of these 4-hour candles, where it came down right there. Tuesday, this was Europe. Then it came back up Tuesday, 6 to 10 a.m. Then it went back down Tuesday, 10 to 2 p.m. Then it went back up 2 p.m. to 6 p.m. Then here we have Tuesday's opening balance. It was bullish. Then we came back down bearish. Today, New York, we went all the way up. That's where we produced our high, came back down. Then the next 10 to 2, when we came in the afternoon, it came up and then it went right back down. And now it came up, rejected, and now we have an opening balance coming right back up. So even the 4-hour candles, they are in a traffic zone. They are accumulating. It's not going to stay like this forever. So if more 4-hour buyers keep accumulating, we should see maybe a bullish breakout coming through this red zone. If more sellers, which they are accumulating, then we might see a breakdown coming back down to there. Right now, if I was a 4-hour trader, it's very, very difficult to figure out what's going on. But what I see is lower high in the red zone, but I also see this big wick, I see this body, I see higher lows. So we're in a pennant. We're trading where this entire 4-hour zone, if I was to trap all this shit, I would trap it like this. I know it sucks, because these are 4-hour candles. Who wants to wait? This might take multiple days before it wants to either break out. So I would do the same thing if these were 5-minute candles, right? That's why I don't like trading 4-hour candles unless I'm swing trading, because there's nothing to see until these things develop, right? So we're in a 4-hour consolidation. You can see how we're trading. It's not trending like this, where it was trending up, then it came back down. Now we're doing this sideways. So what I see is maybe a pattern that we can recognize. What about this pattern? We see this one leg up, there's our top, came back down. So all of this shit in here is a neckline. So are we gonna get this next push, filling these wicks and coming back up? Or have those wicks already pushed down a lot of volume and we're going to maybe come a little bit inside here, and then sellers are going to continue pushing this down, and then sellers are really going to redistribute down here either later tonight or tomorrow, okay? That could be one of the narratives. But right now it's bullish, ignited, still pumping up. So if we go into the hour now, this is where, we can see exactly 8 a.m. COMEX, very bullish. 9 a.m. came back down. 10 a.m. with the news, went up and down. 11 we went down. 12 we were trading at this time. Noon it went up. Then it went back down at 1 p.m. Then it came back up at 2 p.m. So even the hourly candles, black, blue, black, blue. Then they thinned out on volume, and now here's the opening price. 6 p.m. it was bullish ignited, came up to the highest point of the day, came back. Even this hourly candle retraced into 50% and got a wick and making a higher low, and now breaking out. So this hourly candle is closing at 47 minutes. Can we continue to fill these wicks and trade into these red zones? If I'm now just looking to make some few scalps tonight, I'm drawing a white line right here. 4216, I'm putting a white line. White line represents hourly body. There's an hourly body close. This was the one earlier, 10 a.m., 11 a.m. So even if we fill this wick, fill that wick, maybe right there we're going to find a little resistance at those bodies, because then above there all we have is wicks. So even if we do come all the way up from where we are now, 08 to 016, that is $8 move. That's 80 pips up there. But you can see they kind of impulsively, they took out today's highest liquidity, and now it's getting rejected. So if we look at it on the 5 minutes, wow, this is what we can see on the 5 minutes. Okay, you remember today, we took this buy on this candle today at 12:05. You guys remember? Were you on the call? We had this big sell-off. We saw that it took out some liquidity. I waited for that candle to close. This one, when it opened, right there. As soon as right there, I took the buy, and I took out, when it came into the 50% of that candle, I took out 80%. I still left 20% running. Then I had a break even with the 20%. These wicks didn't get me. I was just below there by hair. And then when it came right in there, we measured it exactly that location of 80 pips. It was at that exact 50% there. I didn't take out my entire 20%, and then you see the trade came back and hit my 20%. After the call, it came down, came back up, came down, swept that low, and then since then we've been coming back up, but it's not making any new higher highs. We're just trading inside here. So there was now that break, fake out coming in. So even I'm looking at these 5-minute candles, these to me look pretty shitty, okay? So what we got to do is we got to kind of just maybe wait for something to happen. I look at the time, it's 7:15 right now. So we still have 45 minutes until the futures market opens up. We're not really moving anywhere with gold. If I'm trading from like the purple line to the purple line, just measure it so we know how much pips we can make. The total zone is about 60, 65 pips. So if we're going selling down and it comes all the way down, we make 60 pips. If we buy and it comes all the way up, we make 60 pips. If it goes down again, we make 60 pips. If it goes up again, we make 60 pips. On average, if it taps into both of these purple lines. However, if you sell there and it just goes down halfway, you make 30 pips. It's all good. But right now, we're not trending anywhere. The volume is not trending. Like if I look on these 5 minutes now, and we zoom in, We're not really moving anywhere. Yes, it went down. That was a bearish leg, but then it came right back up. Bullish leg, neckline. Came back down. Second leg, there's the double bottom, and now it's coming right back up. There it broke, but you see when it could have retested, why did it not go up, right? So you see how that's a fake out, and now the sellers are bringing it right back down. So at least we can see some volume traded above the daily high. I'll highlight it for us, but it is a clear fake out. They faked out those buyers up there. You know, I don't see a retest of the purple line and to continue to go up. So that's a fake out. And then I see there was a fake out right there, a fake out right there, all of those bodies. So what I'm going to do is I'm going to clump all of this shit together and I'm going to make it red. Just to let us know on the 5 minutes. Let's not get faked out there tonight. See, like, yeah, I know a little bit more moved up there, but it didn't do anything. It just went up and came right back down. Most of the volume is concentrated in here. There's a wick, a wick, a wick. Black candle, black, blue, black, drop. A wick in there, blue candle, black candle, drop. Blue candle, big black candle, drop. Come in there, drop. Fake out inside there, drop, right? So I will not be looking to buy tonight unless buyers can close it above there with a blue candle, retest this area and build this to take it up to there. Otherwise, I'm not falling for this shit. Because these buyers are getting trapped there, getting trapped there, trapped there, trapped there, and trapped there. This is a trap, okay? But what we have to do is also watch from the bottom. Is it building more momentum to break through here? So that's a higher low, that's a higher low, that's a higher low, and that's a higher low. So even though it's still fake out, as it comes down, it's still gaining some pending orders and coming back up, okay? So one area on the 5 minutes is now I can see that there's some structure here. There's a wick, a body, and a wick. So 42.04 is now holding today's lowest point of the day. So the 5 minutes are creating a little bit of bullish support on the bottom, but we're not really doing anything up here. So it's just in a really tight range. I know, and it's going to upset someone and say, Ron, are we buying? Are we selling? Are we buying? Are we selling? You have to understand what I'm telling you. This is not the best time to be buying or selling. This is the time to just sit back, have a drink, watch what's going on. Okay, this is probably the worst time you could be trading at this time. 6 p.m., 7 p.m. The futures market still hasn't even opened up. Spreads are probably pretty high right now too. Okay, so let's just, watch. If we do see a setup, obviously we're going to trade. We're going to take it. But what do you guys think? Like, do you guys see something that maybe I'm missing? Aaron, how can I talk so much without getting tired? I'm really like this. I'm like a life of a party. You know what I mean? If I ever get with you guys, like let's say we go out for a coffee, we go out to a bar or wherever it is, I'm going to be the one that's in your ear talking. You're going to tell me, Ron, shut the fuck up. Like, you talk too much. I'm that guy. Like, that's me, okay? So, I'm full of energy. I'm full of life. You know what I mean? I enjoy what I do. I'm passionate about what I do. I love to teach other people about trading. Sometimes when I get together with my neighbors, they might just ask a silly question like, how is the stock market doing? And then that's it. I go off. And then I don't shut up for like 2, 3, 4 hours. And they're like, Ron, I just asked you like just 2 minutes. Just what is the stock market doing? I didn't want the whole spiel of the whole history of the stock markets. But that's me, guys. Like, I really enjoy trading. I really enjoy teaching about trading. I know how it's financially changed my life for the better. And I know also not just my life. I know in our group, I know many snipers in our group, how their lives have changed for the better. So it's not just a testament of myself. It's a testament of you guys as well. So whenever I see either one person change their life for the better, it's made my entire day. It's made my entire everything I do. I'm blessed to do this. You know what I mean? But some traders are really struggling. They're really struggling. Like, I was going to cancel today's call. I didn't want to get into this, but since you guys brought it kind of up, someone in our group on Discord privately messaged me and said, Ron, it's kind of like do or die for me. Please, there's no one I can talk to that understands trading. I'm ruined. I've lost like my life savings. I've kind of refinanced my mortgage. I've got kids at home. Hasn't told his wife about the situation. He's like, it's like he's just said, please, I need someone to talk to that understands this. And I said, I'm your guy. I understand. I know exactly what. And I was going to cancel today's call to talk to him, but he said tomorrow afternoon is much better. So guys, you know, like there is real life in trading as well. It's not just candlesticks and, you know, we have a good time. There's also a lot of, you know, financial difficulty that happens in trading. It's like gambling. It's like gambling. If you treat the markets like a casino, the house always wins. You're going to lose, right? I personally, I don't gamble in the markets. I'm sorry. I know it's not good for YouTube because YouTube likes to see people over leveraging, full porting accounts, seeing people make millions of dollars. I don't do that. I don't. Honestly, I don't. I'm not that type of person to ever do that, nor would I want to do it just for likes on YouTube or subscribe. I don't really care about that. We don't kind of show lifestyle too much here, what we do. We really show what we know about candles, what we know about trading. That's what we want to be judged by. And also we do help our snipers a lot. Like personally, I've helped a lot of people, and the stories, like I'm not a psychologist, right? So another disclaimer, I'm not a psychologist, but I've learned over time doing this that you got to be a psychologist. You have to be your own psychologist because trading is very mentally draining, not just emotionally draining, mentally draining. It's not easy to do this. You know, like I know all of you guys are fantastic you've got fantastic technicals. You guys chart way better than me. My charts are ghetto. My charts are ugly. You guys, when I see your charts, when you're sharing them with me, you got everything all written down, what this is, what that. I'm like, holy shit, I'm blown away. Like, how much time did you spend charting? And it's beautiful watching. I wish I could do it like that. But one thing that I'm good at is managing risk. And that's where I think everyone needs to get to that next level. It's all about managing risk. That will make you that much better of a trader. And just being patient. That's the other thing. Like, see that nice big blue candle that just came up and then it just got rejected back down? Okay, so what I'm saying is, let's see, can this blue candle close above this red zone? If it doesn't, then it's a failed candle. But if it closes above, then it proves to me buyers are still strong, and then I can maybe flip that red zone green. But the only other thing is, if you buy right now, you're buying an impulse. And yes, it could continue to go up. But this was an impulse candle. And look at, if you bought, it came all and sold back down there. This was an impulse candle. If you bought that, look at what it did. It went all the way back down there. These were impulse candles. If you bought any of those, look at it, dragged you down. So maybe since it's been building here, higher, low, this might be another impulse. And this one might actually physically close above here. Maybe it might not get rejected. So sometimes when you take these, yes, you can make money off of them. But don't always feel inclined that you have to take an impulse. I know it feels like it's a nice candle. Oh my God, it went up. But would you have done anything if you bought that impulse candle? Because sometimes they go up 10, 20, 30 pips and then they get a wick and they get rejected right back down. And then you're right back where you started or in drawdown. So sometimes when you're impulse trading, you have to have impulse rules like I do. If this thing goes up, you know, like how it's going up, if I bought this thing, it's up 10, 12 pips. I'm looking to kind of fill wicks. If it did its job, even on impulse, right there, even if it's 15 pips, I might be out of this candle, take my profit and get out and then watch it where it physically closes and then trade after on a pullback. But that is a really nice breakout candle. Okay, so the market is moving right now, but we have 60 more seconds. So number one, if we're not in this, I'm observing. It doesn't have enough juice to break above that prior wick right there. Okay, because that's like our most recent high. This was at 3:10 p.m. Eastern. So since then, hasn't created a high. Will it get up there? Will it not? Will it come down? Next thing I'm doing is, as soon as this body closes, maybe I'll flip this red zone green. I might have to wait for it patiently to come back inside here. I could look to buy there. What I'm also looking to do is maybe cut this candle in half, figure out the halfway point. I'm also figuring out how high it is closing relative to the wick, because the next bar could open bullish ignited, fill that wick and continue to drive up here. I'm not in a trade yet, but I'm going to look at my spreads right now. Even my spreads are really high. Gold 1.7. That's like 1.2 over than what I normally trade gold. So spreads are really high right now for me personally. Some of you guys are trading futures. You guys don't have to worry about spreads. That's cool. Okay, so first thing, did it close above this? Yes. Okay. So we did now break a new high, daily high. We broke above that purple line. So we got a new daily high. I flipped that. I could also look to cut this bar in half. Okay, right there, I'm cutting it in half. If I, that was me guessing, but if I don't want to guess, open, close of that candle. It's a nice big bullish candle. Look, Ron was, again, right on where the halfway point is, okay? I could do a point of control of that bar as well, but I also have that green box right below me, okay? So I now want to watch to see. If I want to buy now, how if I wait right there or right there? At least mentally, I know that I'm getting a discount if I wait right there or right there, as opposed to buying the high. But sometimes when we're waiting for it to come down, it doesn't come down. It picks up a higher low wick and it's gone. So we gotta either, you know, you gotta wait patiently. It might not be the next candle. It might be 10 minutes, might be 20 minutes, might be 30 minutes. It might not even come down here during this session, okay? You have to know that, right? Most mature, experienced traders know that. A lot of immature traders, and I was an immature trader, or beginners, they think it's going to come down right away, like the next bar. You got to understand that, no, that's not always the case. It might just kind of consolidate up here, and then it's gone, and then break this, then it comes all the way back down there, okay? And it takes time for that to develop. So when you're learning patience and discipline, you really have to learn patience and discipline, okay? But it's part of the game. And then if you can't be patient enough to wait in there, then we're got to trade this volume, but we got to watch what's going on. So this is a black candle coming down. Will it pick up any buyers? Will we see a wick? Will we see a return? Then I see two small wicks. So even if it returns, it'll possibly fill those wicks and continue to drive. Where are we going to go? Well, that white line is that hourly resistance. And then I can see a lot of 5-minute wick right there, right there, right there, right there, and right there. So somewhere inside here would be like the next short-term resistance. Right in here. That's why I place these red lines. I know that the white line is my big hourly resistance. And then this one, I'm just looking where that wick was support, 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 support. That big black candle closed below. When it came back up there, it was resistance. They pushed it right back down. So if we come right back up, maybe right there might be where it comes up and then they drop it back down. If it breaks through that, then I really have to respect my white line because that's from a higher time frame, okay? Now you see we got a black candle coming down. So you know when I say it takes kind of like 2 bars to understand where we're consolidating? Right there, these two kind of red lines, that red line and this red line. That's where it could be flagging right now. And you see how I got it from where that body closed, where that body opened red line, and then the cut line of this. So that's where it's kind of consolidating still in here. That was a big black candle. Did it touch the red line? No. Did it come in here? No. So it kind of just got a higher low and it's flipping back up with 1 minute and 50 seconds to go into the close. So you see when it came back up, when it came right near the opening price of this candle, sellers are again, they're pushing it right back down. Okay, but it's still in this kind of consolidated range. Webby, what's going on? Long time no see. Welcome back, brother. We're still here. We're here every day. I know traders, you know, come in, come and go, come and go. I know how it's like, but we're here every day. Rain, snow, shine, the good, the bad, the ugly days, we're here with you. The good hair days, the shitty hair days, we're here with you. We're always here with you. Charles, you're using a cent account on gold. Good for you. Good for you. You know, it's very, I know you got to set your ego aside and say that you're using a cent account, but believe me, don't look at it as cents. Look at it as like points. And when you make, let's say you make 20 cents on today's call, you've made kind of 20 points or 20 pips. Maybe you make 50 cents today. I know it's not enough for you to buy a Lamborghini, but 50 cents, when you learn how to do this, and then maybe if you have the capital or a prop firm, then 50 pips a day can turn out to be $5 a day, $50 a day, maybe eventually, you know, God bless, maybe you're making $500 a day. And you learn how to do this, and then you purchase a $50,000 or $100,000 prop firm. Or maybe I don't even know you, and maybe you have that type of money capital waiting and you're learning on a penny account. That's fine. I have the most respect for you guys doing this. I have respect for demo account traders. Believe me, because I know how hard it is for people to do that, to just open up a demo account or use pennies when they're trading. But mentally, psychologically, you're so much more advanced than other traders because you're understanding that you're in a learning phase. You're learning, and then down the road, you can turn those pennies into bigger dollars. Okay? That's how this game works. You don't have to learn by opening up a $100,000 account and then losing all of your money. And then where do you go from there when you're still learning? Wow, Charles, you've grown your cent account to 150. That's impressive. That's like, if we're talking percentages, that is crazy. Like, that's like someone saying I took $1,000 to like $150,000. That is unbelievable. Good for you, man. Congratulations. Okay, so you see how we're kind of in this flag. It came right back down, wick, came back down, wick. We're in this flag, and now it could be another breakout back up. So again, I just don't like buying the highs personally. Like if I bought that wick or that wick, I'm in the money right now. Okay, but I didn't, right? So the last thing I want to do is just force and buy highs. Remember, that's FOMO trading. So as traders, we want to try and eliminate FOMO trading. Remember, we're trying to be patiently waiting for a pullback down into this discounted areas. If we just go back to our old style of trading and just buying highs, we could buy up here. Then what happens, hypothetically, if we buy and then they drag it back down here, we're in drawdown on our buy, and then we're patient buyers are waiting in here, and then we get locked out, we get closed out, and then buyers are bringing it right back up. So unfortunately, sometimes this stuff happens, okay? And this is a new 30-minute candle opening the market, and it's still moving up bullish, okay? And it happens, okay? Someone will say, well, Ron, you missed out on a buy. I understand that. I fully am aware of that. I'm a big boy. I understand I missed out on a buy. But that doesn't mean that I still can't get ready for a trade. I could sell up here. Like, these buyers are buying, but they're going to have to find some sellers in order to close their position. So if I know what the overall trend is above, like I can see I know what this big red box is. It's a big point of control. I see it got rejected there, lower high there, lower high there. Now it's coming right up again to an hourly resistance. So maybe sellers are positioning themselves here to push it back down. So just because I'm not buying the high doesn't mean that I can't be looking to maybe sell up here. Because these buyers need to find some selling liquidity in order to realize profit or close their transaction, right? Just like here, these buyers brought it right up to there, and then the sellers brought it right back down. So now the buyers are bringing it right back up, but are they getting rejected back down with less than 2 minutes to go? And this volume, you guys know, during Tokyo sessions, just prior to futures market, has been unbelievable for gold as of late. There's been 1 or 2 off days where it's been really choppy, but for the most part, this time is not bad trading gold. There's some big moves. Like if we're measuring these candles now, like that blue candle is almost 40 pips, right? So they're big volume-based candles. Like this one we're on now right now is 30 pips. If you were in buys down here, that could be your daily goal right now, okay? And then when we look, let's just go back to the daily candle. Sorry, let me just add the daily candle right here. So you guys know how we opened. And look at it, it's trading real strong. So we got a strong daily candle. So maybe this volume wants to target maybe this hourly resistance right here. And then I'd like to see maybe if there's some hourly sellers here to hold this daily candle down for a little bit. Otherwise, this thing still has majority room to run, okay? If I'm looking for a pullback buy now, so if it comes back down, maybe here for 212, that would be a good buy, but not the greatest. A deeper buy would be down in here at 4210, Better would be at the previous daily high, which could be support right here at 4209 if it comes somewhere inside here. And again, it closed very strong. So, you know, we can go up and cut it right there as well. So the cut line corresponds with the bottom of the red zone. So now we are physically trading into the red zone. So if I show you where we're trading on the daily, this is where we are on the daily. See our early daily bullish candle? It's coming up, coming up. Remember yesterday's big wick right there? Okay, so you see where I marked that white line? That was from the hourly. I'll go back to the hourly, show you where I got that white line. But remember that yellow line, 4227, we cut it. Maybe if it comes all the way up there, it could get pushed back down. But if today's daily candle is strong and continues to break through here, you can see it could continue to come up, and gold could be very strong today, continue cut through here. Okay, but it's not easy to short this thing right now because it's still a very strong daily candle. And then the white line that I got was simply right here. You see this body, which which closed at 10 a.m. today. So it opened down there, it came down, made that high, closed right there. And then this candle opened right here at 11 a.m. It came up and then came back to the opening balance and went back down. And we haven't came up, we almost came up there at noon, got rejected back down. And now you see how we're coming all the way right back up. So I want to see what type of reaction we get at that white line. Okay. And then you can see I have that yellow line right above there, that daily position. So if the hourly candle continues to backfill 11 a.m.'s wick earlier today, then maybe we'll get some resistance at that yellow line right up there. So right now, still very strong, this hourly candle, and the 5-minute candle is still trending up. If you guys are in buys, congratulations, okay? I'm not in, but if some of you guys are, great. If some of you guys were trying to sell this thing, you know, it happens. Unfortunately, it happens, right? It happens. I'm not in a trade yet. I just kind of want to see what will happen kind of up here. Okay, there's a big shooting star candle. So it came up, it came up. Did it tap the white line? No. So it's just a little bit lower than it, and they're pushing it down now. So this candle now, half the time is exhausted. So for the first half, it was very, very bullish, came up there, and now they rejected it back down. So this is what we call a bearish pin bar shooting star candle coming down. Will it close like this, or are buyers going to bring it right back up? So this is an indication that we do have some selling pressure in the market, but we also had selling pressure on that candle too. But you see how it didn't break 50% of that point of control, and then the next candle kept going up bullish. So this one could just be another cool off candle, and then next one could be another blue candle coming right back up. Okay, we still have not really transacted, like a little bit above, a little bit below right there. So that's why I'm just going to make that red. Okay, so you see how it came back down to the opening balance of this candle, coming right back up. So now will it have enough volume to continue to transact into that white line, or no? So as it came back up to its own wick, sellers are there protecting it. They're there pending, and they're trying to push it back down. But we got this inside consolidating bar. You know, it's still filling up with blue volume. So I know the buyers are still there. They're still transacting. They're still buying. They're still asking to trade up here. We're in an uptrend right now, like on the short term, where it made this higher high, pull back higher low, new higher high, pull back higher low, new higher high. But I want to see kind of if it comes in here, maybe gets rejected, and it comes back in, maybe a double top, then they drop it and redistribute it back down. Okay, that's kind of what I'm looking for like a sell side setup, right? Otherwise, if I'm not looking to sell, maybe a small pullbacks, and then I'm looking to continue to buy this thing out of here. This is the Australian news coming out. So you remember when I said there was some red AUD folders at 7:30? So that's them being released. Right over, or sorry, not red folders. They were low impact folders, AUD news. That's them coming out right now. So if you're a currency trader and you're trading AUD, okay. So we've got a new candle opening. Okay, so you see we got a little spin top there. So we may now figure out maybe the market needs to just trade sideways right here for now. Okay, so you see where we're at now. So it's still in a bull flag. It could continue to flag in here and continue to break out. We haven't tapped that white line as of yet. So there's sellers here. They're pushing it down. But again, it could just be another black candle that comes down and it catches a wick and then goes back up, right? So I got to kind of watch and see now. Now we're finding a little bit of resistance. Do I think Bookmap is useful for CBD? Bookmap, any depth of market, any additional depth of market is useful as long as you guys know how to interpret and read it, okay? I know some of it is displayed in bubbles and some of it is displayed in like a footprint chart, but if you don't know what you're looking for, it adds no benefit to you, okay? It's just like candlesticks. If you don't know how to read a candlestick, it's not going to add any benefit to you. But if you know how to read an additional depth of market, like Bookmap, Quant Tower, footprint charts, then yes, it adds a little bit more confluence. Then you can actually see the pending orders. You can actually see where the heat map is. You can see where the blocks are in the market, right? So then maybe that will help you. And then you can also see iceberg orders that are kind of spoof orders where you see a big block of pending orders in the market. Then when it's coming down, you see that block disappear. And then that's kind of like just a fake out where they cancel those and then allows the sellers to come right through. Those are things I can't see when I'm looking at traditional candlesticks like this. So yes, if you do use an additional depth of market such as Bookmap, just please learn how to interpret it. Take some time. There's a lot of good YouTube videos on it to help you learn about it. Once you learn that and you combine it with what we kind of teach here, then you add those two together and you're making yourself that much more stronger in the markets, okay? But yes, depth of market is really good if you understand how to use it. Okay, so we've kind of figured a top now, okay? So we can all agree that it came up there and now it's pushing back down, okay? So I'm just looking to see if this black candle comes down, gets a wick, and maybe goes back up one more time, and then we look for our traditional double top there. And then maybe the second top has more volume to push this a little further down, right? Otherwise, do we want to just sell this first leg that's coming down? So the candle's closing in 2 minutes. Now it's transacting right at 50% of that bullish candle. There's a little bit of a wick there, so it's found some support. Now we got to figure out where and how this body will close. And then that's what I mean, guys. If you're also in buys, that's why I target these higher locations to close out profit as well. You don't have to close your entire trade, but maybe take out 50%. I have an 80-20 rule where I take out 80% of my trade at these specific locations, and then I leave 20% to continue to run. But that's where I marked off for you guys that hourly resistance right there, okay? So, you know, hourly is much higher time frame than just these 5 minutes. So that's where you can see that the bigger sellers are there, and you can see the bigger move is coming down now, okay? So this goes for both of you guys. If there's buyers, you need to learn how to maybe close out some profit, realize some profit at these locations where there's more higher time frame sellers, more pending orders up there. Okay, so this candle is now closing in 20 more seconds. Guys, today we have a short session. We're going to like 8:30. So if you guys can kindly hit the like button, we do appreciate it. Thanks, guys. We really do. And then you see this red line? I'm going to use this as my cut line going forward. As soon as this black candle closes, I'm going to cut it. Okay, so there's the halfway cut point. See, it didn't close below. And then the next candle opened bullish ignited. Okay, so open bullish ignited and kind of got rejected. So yes, sellers could continue to push this thing down. However, it could come back up blue and go up back higher up here. Then I look for that second top. So I got to kind of make a decision now. It's a small doji candle. Should I start selling this thing right now? And then I know if I'm selling it, I'm selling like another impulse leg to come down, because I didn't get verification of the body closing below that. So, you know, even if I do take this sell, yes, it could drop, but I could also come down a little bit, catch a wick, and then go back up. So this is, I got to understand if this second leg is going to come deeper down, and this is the true neckline down in here. So right now it's trying. I'm going to go for it. I'm going to take the sell on the second leg, and look at where I'm placing my stop loss. I'm going to place my stop loss above that white line because it hasn't been transacted yet. And I'm just going to go right above the box there. So I'm giving it room to breathe in case the buyers continue to bring it back up here. And then to test that, then I'm looking for the actual second top while still being in the trade. Yes, it will go and draw down, but giving it room in case it goes down. But if the buyers break it out of there, I no longer want to be part of this trade, because then they could just break it out of there and go for a new higher high. Okay, so that's kind of my maximum risk I'm giving it, just a tad bit above the hourly resistance and above that zone, right? And then what I'm looking for is, can the sellers now kind of push it down with the next leg of volume? Whoops. I want to get rid of this yellow line and maybe push down to that purple line down in here. Like I'm looking for this move, how it came up, and then I'm looking for maybe this leg to extend down into here, and then it comes back up, right? And I'm just looking to sell from this point down to there, okay? And then I get my ruler to measure if it does come down there to that red line. It's about 20 pips to break those lows. If it can get to the top of the green box, about 28 pips. Trade in the middle, 35. And then right down to the bottom could be about 40 pips down in there, okay? And it's about 12 minutes away from futures market. So if I can get this selling leg in the next 10 minutes prior to futures market open, because maybe it comes down there and then futures market picks it up and brings it right back up. However, it could come up one more leg up, stop me out, then futures market is when it kind of sells down. So it's kind of like a little bit of a gamble, but still watching this candle, still doji candle, has not even traded into 50% of the previous black candle. We're still just trying to trade right down to this lowest point. So we don't have much volume right now, but sometimes these candles that are just coiling up like this, they will explode with some type of volume. I'm hoping that it will explode to the downside with sellers redistributing, but right now there's kind of like a little pause in the market. These are those small little doji candles. But we got it kind of accumulating still. We got some nice selling pressure. So what we got to do is break that previous wick to create a new lower low and maybe transact back down at these wicks. And that's 50% of that blue candle. And I already measured if it comes down there, it's about 20 pips. That's what I'm looking for, 20, 25, 30 pips. If it starts coming down there, I take my stop loss and start reducing it down. Oh, I didn't add those EMAs, my bad. Okay, so the 9 EMA is right there, that green line, right there, 4212. And also the 200 EMA is right in that green box. So I'm trying to get it down to come down to that 200 EMA and then close out the trade down in there. Close out 80%, leave 20% running. And then also, will this be the first black candle to close below 50% of this blue candle? And we got 20 seconds to go into the close. Okay, so I got to kind of watch the closing volume. Okay, so it did in fact close below 50% of that candle. So I could use this for any retest. It opened ignited, bearish, so that's perfect. If it can just continue to push down, fill that wick, we would drop, but it got a wick still holding there. So even if it turns up blue, to retest the bottom of the red zone, that 4213, I could find a wick there, or even at 50%. Now it's bearish ignited. I got the candle open that I want. Now I just got to see the redistribution start to come down here. And as soon as it starts coming down into 15, 20, 25 pips in profit, I'm going to slowly bring my stop loss down with it to reduce my risk in the trade. So I have the candle open that I want. I have my bearish ignited candle, but as it came down, you know, that 9 EMA is holding support. There's the wick coming back up. So I got to continue to rely on my opening balance to continue to hold this black head on this candle to continue to come push down. As soon as this candle flips blue, I've lost my opening on this candle and then could start that next move up. So you still see how it's still holding its black head, still ignited. So the opening balance is still holding strong. Now with those offers, can they continue to take it down its wick and break for a new low? Okay, so you can still see how the bearish ignited head is still holding. It didn't break. It came right up there, but then it went black again. Okay, so that's a good indication that this body is still holding strong, right? It didn't flip blue. The sellers are protecting the opening balance of this bar. And then it just produced a new low. If you see it, it just moved the wick lower. But we're struggling at this 9 EMA. But if we can break through there, I'd like to see it come retest this red line because that was that previous wick right there, and 50% of this big blue candle down in there. And man, we're getting so much closer, 8 minutes to this futures market. So, you know, you kind of got to make a decision here. Like, oh man. So it's still holding its ignited head now. It's been holding for over 2 minutes and 20 seconds. But every time it comes down there, those buyers are pushing it right back up. So we're going to try a third time again now. See if we can hold the opening balance and come down with more offers and more volume and try and break that wick for a little lower move. But you can see if it's holding there and it flips, then we're going to get that leg coming back up. And then that's the drawdown leg. Trev, just give us an email, Trev, and we'll get to it. It's kind of late over here. Maybe tomorrow morning we'll handle it for you. Trev, just give us an email or in Discord. Open up a ticket, bro. It's too soon for break-even time now. Yeah, it's too soon. Like my break-evens would be like almost right now on this candle. So too soon for break-even. Okay, but you see how it flipped blue, so it got a wick, then it came back down. So now the buyers have taken control of this candle. We lost the opening balance, okay? So now it's retesting. Remember, we still haven't even retested, right? So now it's coming up. Now it just retested. Again, it's got that wick pushing down. So there's a big fight over here between the buyers and sellers, and I can tell it's getting a little volatile because we're entering 5-6 minutes away from the futures market. So you're going to start to see candles going to start to get a little volatile now. You're going to see it's going to get angry. It might come down black, might go up blue, might get a wick coming down. That's the volatility coming into the market. Okay. And we have 60 more seconds to go on this candle. Yeah, lots of support over here right now. Lots of support. Yeah, just looking for a 25 pip drop, you know. Where's the volume? Like, remember these nice big blue candles? All I'm looking for is a redistribution coming down here. But sellers are still controlling the candle. Still, we got lower highs, lower highs, lower highs, lower lows, lower lows. We're right back down to the lowest point. But this nasty 9 EMA is holding a lot of support here. 10 seconds to go in the close. We just broke it. That's good. Good bar. Okay, so get ready. We're going to lower our cut line. As soon as it closes, we're going to cut it. There's the cut. We cut it. Okay, we got another bearish ignited bar short wick. Hopefully we can just pop and start dropping. As soon as we pop and start dropping, I'm already going to start lowering my risk to that red line now. Okay, so my risk is now lowered. I'm not all the way up there anymore. I'm right here because I know that the futures market is opening up in 5 minutes. So even if I get tapped out there, I don't want to get stopped out all the way up there. So you see now I'm in the money and I just reduced my risk from all the way up there to just above 50% there. Now it's coming down, pushing down. If you want to go to a break even now, you're welcome to. There's our 20 plus pip drop. I'm going to go to a break even now because I know the futures market is opening up in just a few minutes. There we go. 30 pip drop. You can take out 80% down there if you like. Okay. Otherwise, you know, you got to continue to hold this, and worst case scenario comes back up, and if you're at break even, unfortunately a BE happens. But you know, this was the plan from here right down to the 200 EMA or the green box measured at 30 pips. So right there, it gave me a second chance. I'm getting out 80% out at 30 pips, and I got 20% remaining going into futures market open with break even. Okay, and we realized zero drawdown on that. So perfect. Okay, and we got to know that futures could bring this right back up. Okay, so don't get too greedy. You guys got that? So I took out 80% right there at 30 pips. I have 20% still invested, and it's at break even. So we realized zero drawdown, nothing. And you guys remember, that was that ignited bar that held, it went back up, but it retested. This one short wick, it opened ignited as well, came up, but we got it, guys. That's the importance of ignited bars and understanding why the opening balance is so important, guys. There we go. So now we came right back down. We retraced right down to the purple line. The purple line was the previous daily high where it broke out, came up to that hourly zone, and we sold the hourly zone back down. Now we sold it down, and now these patient buyers who wanted to buy the opening balance, they're buying right now. That's why it's a good opportunity for us to close out our trade down here, because the buyers are buying up, and futures market might open up, and buyers bring it right back up, right? So guys, you know, and if you take it and if you close the trade there, you get your money, and then it keeps going down. You can't always look at the, oh man, this coulda, woulda, shoulda happened. Just this, like this, how I trade. From a plan, from point A to point B, I get my money and I get out. And whatever happens after the fact, you know, I'm not greedy. That's why I keep 20% running. If the runner wants to continue to go, God bless. I hope my runner dumps all the way down. But I don't want to leave the majority of the bulk of my trade and then just play games with it. You guys understand that? This is like a scalper's mindset. Everyone said, Ron, I want to learn how to scalp. Well, you got to have my type of mindset. Okay, when we're scalping 1, 2, 3 bars. That's it. I'm not looking to hold this sell into next Friday, right? It's just from this zone to this zone. That's it. And then someone will say, oh, it's only 40 pips. It's only 40 pips, but one more 40 pip trade, another 20 pip trade, you've made 100 pips for the day. That's professionals' daily goal is 50 to 100 pips. That's it. I know they're not doing it with a penny size account like Charles here who's learning, you know, but still can teach us how he took penny account to $150. But some professional traders are doing this with standard lots. So 30, 40 pips is $400 US. Another one, it could be $500 to $1,000 that they're trading every single day, right? And they're just looking for small incremental moves with larger sizing and controlling their risk management all at the same time. Right? I didn't put an extreme stop loss. I just told you where I took the trade. I just was above that hourly white line because it hasn't been tested, and I just kind of put it above the block. But as soon as I started breaking down for up to that red line, 25 pips, I told you I started bringing it down. Then I had my stop loss right above 50% there. When it completely broke down, I went to a break even, and I took out 80% at the bottom of that wick right there. I'm still in it with 20%, but it's got a high probability it's probably going to get hit right here going into the futures because the future is going to reverse this market back up. Guys, do you guys understand that? Because it's really important to understand this. I hope you guys do, you know. Hey, Jens, nice. You got 1,500 on your combine. Amazing. Congratulations, man. That's impressive. Good for you, man. Good. See, guys, now I don't feel bad taking out 80% down there because I did at the perfect timing. I sold. I'm a seller. I sell my position where the buyers are. It's basically exchanging and shaking hands. That's what a transaction is. Now you see how the futures market opens up? Look, I'll tell you when I'll let you guys know as soon as I get taken out here. They missed me on that wick, but there I just got taken out. So break even is that 20% break even. I gave it away, but am I happy that I secured 80% down there? Yes. Right? In that green zone, right below that 200 EMA. Now it's coming up for this leg, so we got to continue to watch. Will it be kind of double top, lower high? Will it push down even further? Or is this thing going to continue to be bullish coming out of here? So, guys, I don't play this game. I'm sorry. With what would have happened, could have happened, should have happened. I learned that years ago to stop that shit. Now I'm trade like a robot. I've taught myself to trade like a robot. From here to there. And that's it. And if I'm buying from here back to there. And that's it. I'm not looking for major moves. I'm not looking for 400 pip moves. Like, I'm not looking for 500 pips. I'm looking for 30 pips, 50 pips. With today's volume in gold, you might get some candles that are 50 to 100 pips when there's a lot of volume. But a couple of those trades, waiting patiently, you can basically hit your daily goal. You can be like cherry picking all day. You can literally wait for good. We traded some pretty shitty volume. Like, we didn't get the best volume to trade tonight. We still just caught that selling leg down. And that's basically what the market gave us. Now you see how it came all the way up there, and you see where it got rejected right at that red line. If I had my original stop loss up there, I'm still in this trade. But it could have broke out of there and came up here. Again, I don't play those games. Would have, should have, could have, right? So you got to either learn my mindset if you want to trade like this. Otherwise, it's not going to work. Right? The only other way it can work is by doing like a rule like I do. Take out the majority of the trade and leave a rest running. The rest running helps me for my psychology. If the runner keeps running, then it keeps me still in the trade. Yes, I'm not making as much as I could have, but same situation I could say is when, like yesterday. Yesterday I took a trade. It went up 55 pips. And I didn't do anything. And then the next candle, but Justin reminded me it was 11:59. And then as soon as he said that, I said, oh my God, I think I swore on the call. I said, we're going into noon and watch, I'm going to get clocked out. And it came right up, blue candle, came up and tapped me in my stop loss. I pissed away 55 profitable pips and it ended up hitting my stop loss for 30. That's an 85 pip swing just by me being stupid, just from me not following my plan. So, guys, trading is all about following a plan. It's not changing it up every single day. This week I'm going to do this. This week I'm going to do that. Today I'm going to do this. Tomorrow I'm going to do that. It's the same shit every single day. And then traders ask me, Ron, how can I learn to be consistent? I'm teaching you. That's how you can teach yourself to be consistent. Follow the same exact plan every single day. And that's it. There's no other questions, right? And if you're struggling with discipline, then do a nice top-down analysis and wait for your volume to come into hourly areas, maybe more daily areas, things like that. So when I'm done a trade, I clean up my charts and I get ready for another trade. If you guys are already in this still, and you never went to break even with me, then maybe you're still in, and I hope this thing continues to break down. But now we got futures volume. So you see how they faked out those buyers, and then now they're punching it right back down. Okay, so all of this, this big move at 7 it was nothing. It was all just to bring the market up to this hourly, and then now look at they're bringing it right back down. Okay, guys, please leave us a like in the chat, leave us a comment. On Zoom, on YouTube, wherever it is, guys. Subscribe to the channel. Oh man, guys, look at that. We hit 90,000. That's huge, guys. So thank you guys so much. We're 10 more thousand subs away from the historic 100,000 subs. That's huge, guys. We've been here every single day with you guys for almost 6 years now, without even basically taking a day off. The good days, bad days, shitty days, all days. We're here. We don't cherry pick what days we're here with you guys. Everything is live, and we appreciate you guys. We got nothing. We're very transparent. We got nothing to hide. We really want to show you the real life of trading. If someone says, Ron, you look tired. Well, you're going to look tired too as a trader. Trading is not easy. If traders say that this is easy, they're lying to you. They're full of shit. I haven't met a trader yet till this day to tell me that this is easy. Never. I even see, I go to my bank and I see financial advisors are more stressed out than how I look. Like they are under a lot of stress as well. in the market. So everyone that is a financial trader is risking their own capital every single day. And that's just saying that is very scary, you know. If you're not trading with a prop firm, you're trading your own money that you use for your family, to pay your bills, to feed your kids, to go, all of these things. It's not easy. Anyone that says this is easy, they're full of shit. They're lying to you. I'll call them out. Put them on this call and I'll have a conversation with them. It's easy if you're not trading live and then you're just showing your profitable trades and going on YouTube and showing that. That's easy. I could do that all day. I would have this YouTube channel up to 1 million if that's what I was doing. Just coming in, showing you guys, I made a couple $1,000s here. This was a trade I took. And then the days when I lose money, I don't make any posts. Anyone can do that. That's what separates us from other channels, guys. And I hope you guys do appreciate that. Some of you guys do, and others come on here and just troll. But that's okay. I accept the trolls. I can play with you guys too. Anyways, let's get back into this. So did this black candle close below that purple line? Yes. Can we make this green zone red right now? Yes. Okay. So we moved away from that consolidated zone. That hourly resistance held up. So, you know, stretch that into the future. That's basically protecting today's high of the day. And now we're pushing all the way back down. Is anyone still in this sell? I always have to ask. Not just I'm out, but for you guys, if you're still in, I just got to know. Because I got to know if you're still in. Because we're getting to some buying levels down in here. Nick, you had that sell, got scared when break even straight away and then drop 50 pips. Don't be scared, okay? Guys, this is another thing. Let's not be scared of them. I hate that word scared. You know, there's other things in life to be scared about. There's other things to fear in life. You should not be scared in trading. If you're managing your appropriate risk, there's nothing to be scared about. Nothing. Trading does not scare me. It's hard, but it doesn't scare me. I have other things in life that scare me, okay? But not trading. Because I told you guys, when I went in that trade, I told you guys I was only risking 0.25%. I told you if I was going to profit, it would be 0.25%. If I lost that 0.25%, if I got stopped out, yeah, it would have looked scary with a bullish count. But I've already calculated how much I'm willing to lose. So I've already accepted the loss before even taking the trade. That helps me mentally. Then just watch what the trade is doing and then not watch my profit loss report and just see if I'm in drawdown, then I start panicking. Because that's when emotions take over. When emotions take over, you're not going to trade according to plan. That's what I mean. You might go to a break even too fast and then it comes up, stops you out, and then it makes the move what it originally was intended to happen, okay? But don't be scared, guys, okay? I know if you're a beginner, trading is scary. It's overwhelming. You know, it's a lot to look for, but just remain calm, okay? That's what I mean, guys. It's always nice to take a break, walk out of the room, go for a walk, you know, cool yourself off, and then come back when you're more calm. Especially if you're stressed out, if you're scared, you know, you got to walk away from the situation. Don't make it worse than it can be, okay? And guys, if you take a string of losses, 1, 2, 3 losses, that's it. You're done for the day. It's like a baseball game. In a baseball game, you can't go up for a 4th attempt. 3 strikes and you're out. That's it. You got to wait for your next time up. Same with trading. If you give yourself 3 trades a day and all 3 of them are unsuccessful, maybe you've risked 1%, you've lost 1%. It's not the end of the world. You haven't blown accounts, but you got to be mature enough to walk away. You can't be that gambling trader that keeps going in and revenge trading and get pissed off and over leveraging, because then you're just creating havoc, a disaster for yourself. You got to be that trader that's bigger than that, that says, I'm going to walk away. I'm going to take a break. I'm going to review my trades. I'm going to figure out what I did wrong. Maybe you were buying up here, right? You maybe bought up here where we were selling. The sellers won, the buyers lost. Even if I bought up there and I got stopped out, I would have to go review this trade and say, why was I buying up there? Then I look at it and say, oh, I was buying the highest point of this run up and I was buying into hourly resistance. Probably not the best thing. So then I would learn, if I see this setup tomorrow, maybe I should not be buying the highs at a higher time frame resistance, right? Then that makes sense to me. Then at least I can learn from that. And then if I see this the next day or the following day, I should be then selling instead of buying. And that's how you learn, right? You're going to learn from your mistakes. A lot of traders don't learn from their wins, right? Because once they win, they're jumping up and down. They don't review. They're happy. But you got to review your wins. Like that trade. That was a winning trade for me personally. I got to review it. Was there anything I could have done better on that trade? Yes, I could have sold the highest point on that candle. But when I review it, remember this candle came down and closed right there. So I went in on the impulse. That candle opened up, and when it broke, I sold. So I didn't sell this candle. I sold this one. This one, when it came down, could have gone up and trapped me. But I remember what I said. I said that this leg, this is not the true neckline. I said this is the true neckline. When it came up, I said it's going to extend down. That's what I was looking for. And then I placed my stop loss when I took the trade just above the block there in case it had to come up for that double top. Just like this candle, how it came up and then it got rejected back down. But my goal was to sell it from there and take it right down there. Remember that 80 pip drop? I wish it was 80 pip drop, but the 30 pip drop for 80%. Now you can see it's coming right back up. So it came deep down into here, coming back up with big volume. So if this blue volume closes back above, we're gonna flip this red zone green. We might build off of this to continue to take us back up to here, okay? So this is how gold is trading right now at this time. It's trading, it's nice. It's coming up, going down, might come back up, might go all the way up, maybe higher, maybe it's trade back in here, go back down, maybe hold this thing, or even sell back. And then if it flips this entire daily candle, we're breaking that. We're coming down to yellow line 4197 tonight, and then maybe even lower down into there. Well, I don't know if I'm pronouncing your name wrong, right, Rechia, but I'm just reading the comment. You're just upset I didn't find us sooner. Been watching a few weeks on YouTube, now 1 week on SSTFM. Thank you. What I recommend, Rechia, is if you go to our education. Sorry, guys, I don't want to take us off the charts, but if you go to our education, there's so much here. Like start off with Forex Fundamentals course, Intro to Forex Fundamentals, commodities, move yourself into types of traders. There's a little bit in there. This one's a really good one. Price action is king. You'll learn a lot about what I talk about the candlesticks here. Broken down, each individual candlestick is all for you. And we also got support resistance, the patterns, pattern recognition, your technical indicators, some strategies, and then the bigger form boot camps. This is a 5-day boot camp, 5-day psychology boot camp, 5-day crypto boot camp, 3-day risk management boot camp. This is one we just did recently, a really popular one, and we're going to release this one very soon, stock and options. And then there's over 120 long form webinars in here. So they're all labeled in here, whatever you need. Like trading with drawdown. This is a good webinar to how to handle when you're in drawdown. Zone to zone trading. That's basically what we just did here. How to do top-down analysis, webinar 32, 34, 36, all about top-downs. All of this thing, fear and greed, how to handle these emotions. We just talked about that with Nick. You know, guys, I guarantee, and these are long-form webinars. These are 2-3 hours long. You need a lifetime to go through all of this stuff, but it is available for you guys, okay? And we're going to do new stuff going forward in the new year. I really love educating as much as I love trading, but I want everybody to continue to learn, guys, because this is a skill that you can use with you for the rest of your life. When you're on, like when I go on vacation, when I travel, I take my phone with me and I'm scalping. Wherever I go around the world, all I need is some Wi-Fi, my mobile. I do my charting and I can scalp while I'm on vacation. I don't necessarily want to do that on vacation, but you know, as a scalper, that's what you got to do. Sometimes when I'm just driving in the car and I'm sitting in a drive-thru, I'm waiting for my kids at school, guess what? I'm on the 1-minute candles and I'm scalping. So it's a skill that you can take with you anywhere in life, okay? You got this for the rest of your life. No one can take this away from you once you learn it, but you got to learn properly, guys, okay? So right now, you see it's a nice big bullish move coming up. We haven't closed above this zone yet. That candle went up, came down. This is an impulse candle breaking out as well. But let's see what happens when it trades back into here. Since you're new to trading, you have a sell pending at 42.14. Is it a bad idea? 42.14 right here. Yeah, it's not a bad idea, but it's a big bullish candle, and we're still kind of trending with this uptrend. So you're really relying on the sellers to be here at this double top, but this could continue to break out because we have a really strong bullish candle. Maybe what I would do is maybe cancel that pending sell right now and just watch. Let's see if the sellers can push it back down, close it below here. Then maybe you can do a market execution sell and jump back in. But that's just my opinion. I would, just again observe, see what's happening, because this might still have momentum to continue to break out of here. Okay, that's a big bullish candle. Did it close above that red zone? Yes. So I make it. Can I cut that blue candle in half just in case we do get a pullback? I would cut in half right there. So you can still see now we're trading into that second top up here. So it's really going to test the hourly resistance. But this is a strong daily candle that may continue to break through here. Then above this white line, I've got that yellow line. Is it going to go all the way up there? If we go look back, here's the 5-minute structure in between the yellow tape and the white tape. So right through here, I can see when this 5-minute candle broke out, there was bodies right there. So, I can start to see prior structure at this time of the day. This was 8:20. There's COMEX. That is literally COMEX market open right there. So then it's kind of took off at 8:40 on the news, came back down. See there, the red line was support, went back up. There it closed below the red line. It used it as resistance back down, and there was resistance and resistance. So now, if the buyers break through white line, I would see what happens at 4,220 tonight. But right there, you see how it came right in. So I'm sorry to say that, but I was saying to maybe call off the 4,214. But if you got activated, you're in the money right now. But we got to kind of follow this candle now where it closes, okay? Because you're selling the second leg, which is good. But you see how it came down, and look at what it tested. Exactly 50% of the blue candle, and found a wick, and now it's coming right back up. So that's what I'm kind of hesitant on, is to sell right now, because it's still a big bullish body and we still have a big bullish momentum. So you're trading into this. I know the setup is proper, but just trying to warn you that we still got some buying pressure. But it is still selling down. Let's figure out where this thing is going to close in the next 2.5 minutes. And you are literally selling the second leg. And second leg traditionally has more volume to the downside. So let's see if that plays out. There was the first top. That's the one we sold down. Came down, found some support right here. And now it came back up. So it's the rate in there, the wicks, nice lower high. And then now we got this candle pushing down. So can it push below 50%, get back down in here? And it could come back up, but then maybe use this red line and then continue to break down in here. Okay. But if you got to sell and you're activated, it's still good in my opinion, but you got to follow this volume. Okay, sorry, it's pronounced Russia. I got it? Sorry, I'll get everyone's names. Okay, and guys, you can literally see how 50% is holding that wick right there, okay? And I just cut it in half, right? If I really want to find exactly where it is, your Fibonacci tool, open, close, and there's 50%. Oh, I was just off by just right there. FX Money, my pleasure, brother, my pleasure. And guys, just a reminder, tomorrow, okay, we don't have a Tokyo session tomorrow. Sorry, let me just go to the scheduling. Tomorrow we kind of taper off our sessions. We had a busy start of the week. Tomorrow Dave is live with Snipers in Zoom, private, 8 a.m. to 10 a.m. And then guys, I'll be coming in post New York around 11, and we'll go till about 1:30. And then for Friday, it's just going to be myself. We'll start either like 11 a.m. for a post New York. Maybe if I switch it up to an early New York session, I'll give you guys notice. But right now, it's scheduled for 11 for the rest of the week, okay? And just a reminder, guys, there's a free Telegram channel for everyone available on YouTube. Join this free Telegram. You get all of our live links to join us on our YouTubes. You get to see what Dave is doing with other snipers in his sessions. You can join Dave as well. He's an amazing trader. And then also in our Discord, you get to trade with our other traders and mentors we have in our Discord as well, which are really, really, really good traders learning together. Everybody's learning together. Everyone has different styles, different strategies, but we put it all together and we all make it work for everybody. And then finally, guys, thank you to all the subscribes. It really means a lot. I didn't think this channel, when we started, the first 10, 100, I didn't think we would grind to 1,000, and now we're at 90,000. So it does show that hard work, dedication does pay off. It doesn't pay off any money on YouTube. If I tell you how much we've made, you guys would probably laugh. So YouTube is a lot of hard work. It's a lot of hard work. Borix, welcome. What do you got? I would sell that on the retest, waiting for candle close. It's rejection on the 15-minute trend line. Guys, shout outs to Forex Borix. He's one of the top mentors here at SST. The man doesn't sleep. He's like me, no sleep. He's in the commodities channel on a daily basis, helping out with his charting, his analysis, his weekly outlooks, his points of interest, points of control, and he's a magician at what he does. So Borix, Brandon, shout out to you. Thank you for everything you do for this community. It's much appreciated, and thank you. You are a true gentleman. Okay, guys, so you still see how it is still holding at this 50%. We had it very similar on this bar right here. You know, when it came down and we cut that, where we had the cut line right there, and then it held and it held, it had that big bullish move coming right back out. So again here, it's still kind of technically holding at 50%, and it could continue to break out even higher, okay? If we get some black volume closing below here, we could technically make this red line resistance for that one more push down. But right now it's still holding right here, okay? So we found a little bit of consolidating right through this block right here. This kind of zone right in here. Did I ever watch Raja Banks Lavish? Back in the day, because he's close to where I live. He was from Brampton. So yeah, I watched his channel years and years ago. Then he sold his house here in Toronto, moved to Pakistan, opened up the brokerage Dominion, and he's doing really well for himself. But yeah, he's a price action trader too. He follows the higher time frame, I believe 30-minute, 15-minute, but yeah, he's good at what he does too, you know. So there's a lot of good traders out there you can learn from. You can learn a little bit from him, a little bit from us, a little bit from somebody else. Put it all together, mix it up, and what do you got? Figure out what is best for you, right? You can always learn from other people. Yeah, he is also the owner of Magic Keys. Yep. I have something very similar, Sniper Keys. They're these, you see these fingers right here on the camera? Those are my Sniper Keys right there. You can't buy these fingers. The fingers move very fast. One hit, boom, 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 80-20, 80-20. You can use a stream deck too. You can configure your stream deck also. Like this thing I have right over here. If you guys look in the camera, see this handy stream deck? This is great feature. You can also configure this to be your own buttons, where you can tap one button and then it will automatically close 80%, 20% to break even, just with a touch of a button. If you've got multiple trades open, like 2 or 3 trades, you can close them all with one simple touch of a button. So yes, if you are a scalper, you should kind of have some sort of hotkeys, short keys, whatever it is, to help you, you know, because every second is costly, right? And you see how fast these candles actually move. So, you know, you got to be quick as a scalper. So any shortcuts that you can have can really help you. But the Magic Keys is really good. oh, sorry, Lee. It's this thing here, Stream Deck. It's used for like, do you see in the camera here? Oh, I'm showing YouTube. Lee, right over here. It's this Stream Deck, and it's used for like OBS and things like that. I can transition from like screens and things like that, or have my browser, my website, but I also configure it for trading as well. So you can configure it where you can have your own little hotkeys used in it. There's a lot of like YouTube tutorials to teach you how to do it and things like that, but I had it configured for myself. I'm not a technology guy. I just asked them if they could do it, and they did it. Yeah, guys, today you can probably make anything with ChatGPT and make your own. If you're good with computers and understand this stuff, you guys are way ahead of me. Maybe you guys understand this completely more than me, but you see how we came up? So I forget who it was in Cinch, sorry, 7387. You had that pending order at 42.14, and you see, you made the right decision. You got filled right at 42.15, 42.14, and it activated you. And if you're still in, you're in the money. So just by placing it there at that kind of second top was a good call on your part. Congratulations. But now, you know, see that big black candle close below? Now you just move your cut line to kind of represent that big bearish candle. So you see where it came up blue? Now it's using the point of control of this candle and continue maybe to push down and come down, back down to these lows. 42.07, maybe it breaks down to 42.05, 42.04. There's your retest. It's respected, and now you got your bearish pin bar. Needs to just fill that wick and continue to drop down. And then you can literally see the one top. There's the neckline down here, came up. There's the second top with the lower high exactly at 42.14, where the gentleman on YouTube had his pending order. And look at it. Now we just got to continue to come down, break, maybe close below here. One more pull up, and then it breaks down to there. And then you can see the daily candle could get exhausted, and then sellers could flip the entire daily bar and bring this thing down. But the way how the market is moving, it could just go up, down, up, down, up, down, up, down for the next little bit. But if it really starts to redistribute, you know, what I would be watching for if I was going to continue to trade tonight is I would be watching above here, this white line, 42.16. I'll place an alert, add an alert up there, create it. So if the buyers come up there and they close it above there and flip it, yes, we could move like I have up here to 42.20, and then ultimately to the daily point of interest right up there, 42.26. See how the buyers are coming right back up. So the sellers are not closing it below or, you know, being strong. So the buyers are still bringing it back up. That's what I don't like trading like this, when it's bullish, bearish, bullish. It's this barcoding garbage. It's very frustrating. It's frustrating for buyers, frustrating for sellers. The best thing to do is maybe avoid trading inside here and wait for more of the accumulation to start expanding. See what happens up here, and maybe if we continue to break down, I'm going to place an alert like right here at 42.04, because if I get an alert down there and sellers are closing it back below here, we could be breaking that daily low and then start dropping down to right here for 4197, and maybe the bottom of the green box, which is 4188. But what I could do as a scalper is from the purple to the yellow line, find some interest points on the 5 minutes. Also from the yellow line to the bottom of the green box, you can see right there where it kind of just dropped and stopped right there. There it came down, back up. There it came down, back up. So this is where I kind of draw a line right there. And then if you move it backwards, you can see exactly wick, 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 bodies, wicks, and then again, wicks, wicks, wicks right there. So this 4195 looks like a supporting area every time these 5 minute candles come down there. It's holding the market right there. So that's what I would be looking for if I'm going to continue to trade tonight. But guys, I'm going to call it a night now. I got a few things to do with my son. He's got a math exam coming up, and I'm like an Asian father. I help him with the math. That's not a racist comment or anything. I respect my Asian friends. They are very smart in mathematics. I wish I was as smart as them in math. We have me and my Asian neighbor, we have competition with our kids in math. yeah, it's true. It's true. I love him. We've been neighbors for over 15 years. Our kids are the same age, so we have math competitions. It's kind of what we do. We're nerd dads, but He's very smart. His son is very smart, and we're competing with them too. It's great, healthy competition. But it's fun, guys. But I got to go help him. We're learning all about algebra, so I'm excited to teach him that. And thank you, guys. I hope everyone has a good night, and we'll see you guys tomorrow post New York. This was a fun. This is going to kind of wrap up our Tokyo sessions this week. We'll kick off maybe a couple more next week, but we'll be more into New York next week. And guys, just trade smart, trade safe, trade with proper risk management. If you do take losses, learn from them. If you do hit your daily goals, walk away. You did your job. You know, it's like a job. Clock in, clock out. You do your daily work. You might hit your daily goal in 1 hour, 2 hours, 3 hours. Then you're done from the markets. Take 30 minutes, 1 hour, go and review, and then you're completely done. Then go be with your family and enjoy the rest of your day. Go on with other things you do. Maybe some of you guys are going to work. Some of you guys are going to school. Maybe some of you guys are operating your own business on the side. Whatever it is, just go enjoy the rest of what life has to offer and just do what you got to do in the markets and get out. Right now we're barcoding. Bearish, bullish, bearish. So you still see this level is still holding up. The red block is still holding up. But this is not the best volume to be trading. This is a good time to walk away, know what good volume is to trade, know what shitty volume is, and avoid it at all costs, okay? Because you might regret. If you continue to trade this, you might make mistakes, you might lose in here, you might get mad, and then in tomorrow morning, it might be the best trading volume, and then you're going to regret. You're going to say to yourself, why was I wasting my time with this when I could be trading a nice trending market tomorrow? So just listen to your uncle and just walk away, guys, you know? And just understand that there's going to be another trade. There's another day. There's other volume tomorrow. Don't preoccupy yourself with this stuff if it's not really moving anywhere. And lavish, you got it. Cut it. When price gets too high, you cut it. When price gets too low, you cut it. So simply, guys, this cut line right here, this thing changed my life. This cut tool right here. I know it's a little ghetto indicator, but it does the job, okay? And it's free. It's available here for you in your toolbox. And then another fantastic tool is your Fibonacci tool, okay? One other thing I just want to show you guys real quick is how to configure it if you just want to find your points of interest, okay? Let me just go to right up here. Clean chart, okay? So you see my settings on the Fibonacci right there, okay? You guys know how a Fib tool works. It's got the 0, 2, 3, 6, 3, 2, 0.5, 618, 786, 1, and the 1, 618. All of these other numbers, when I'm using it just to find the cut and the point of control, all of these other lines are irrelevant. So if you just go to your settings, you click on it, go to style, come here, take off the 0, uncheck the 236, keep your 382, okay, that's going to be our top or bottom of our point of control. Always keep 0.5, that's your cut tool, that's your cut line. Keep your 618 because that complements the point of control above or below. Get rid of your 786, get rid of this 1, and get rid of the 168. So you see what I have just checked off? 382, 0.5, 618, okay? So this is what it should look like. You should just have your 0.5, 382, 618. So anytime I see a bar, like let's go to the daily, right? And if I want to cut this bar in half, let's say I want to find the point of control of this daily bar right here. Monday, November 27. It's a bullish bar. I know bullish bars open at the bottom and they close at the top. I've now configured my tool right there. Map it at the bottom, opening price. Go up to the closing price and bada bing, bada boom. You see how it is perfectly designed for me? Look at the cut. $4,099.60. $4,100 on the dot. That sounds to me like a real psychological area. Yellow line for my daily point of interest. Cut it. When price gets too high, what do? We cut it right there. And then let's complement it with the point of control right there. And then your Fibonacci tool does everything for you. And then once you figure it out, your job next to do is stretch it into the future. And then you use your cut line as your signal. Right click it, add an alert, create it, and we're good to go. So if the volume gold ever sells back down, if it comes back down, 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 we will get alerted right in that point of control, and it's got a high probability, not 100% guaranteed, but it might bounce back out of there. Why? Because all of these buyers that they wanted to buy this high, this high, this high, this high, that are patient and disciplined and never bought in, I guarantee you they're waiting, pending in here. They're waiting patiently 2 days, 4 days, 6 days, 8 days, and they still haven't came down here. But when it comes down here, there's going to be a shit ton of pending orders waiting in here. Maybe they get filled, and then maybe it bounces right out of there with minimal to zero drawdown. Then you guys know the 3 options that can happen down there. This is option 1, come down and bounce right back out, okay? And then it could also find a neckline and then come back down, maybe a double bottom. And then you know that second bottom is the bigger leg, stronger leg, okay? That's option. It could be this option as well, where it comes down, it breaks, okay? You know, on impulse, it could be a daily candle breaking, but when it comes down there, it picks up a wick maybe at mid-afternoon and comes back up, and then it closes back above the green, and then next day it continues to go up. So then I know that it came down, they swept the liquidity, closed back in the box, and is back up gone. So option A, option B. The third only other option is sellers are breaking it down, but it's not this option 2. It's not with the wick and goes back up. It actually closed black below there. Then when that happens, what I do is I look for the black volume is confirmed. So I know sellers broke that block, closed below. So I give respect to them. And then I flip that green zone red because I know buyers are buying the dip coming right back up, but then they might be coming right up to a red zone. Those sellers are there offering, and then they're pushing it down. That's like, I bring this zone, you see, now that bar closes below, so I just change the zone to red, and then when it comes in, it comes down, retest, and in breaking, then I'm selling. That's it. That's how markets move, and those 3 fractal moves. And you got to understand those 3 options. Do they happen all the time? No, but you're going to get one out of those 3 options, and you can literally wait patiently to see which option it is if you wait for a body to close on your particular time frame. If you can't wait on the daily, then like these daily traders, they're waiting in there. I can tell you that they're waiting in there, but maybe they're waiting, but they've gone down to the 4 hour. So they're still waiting in here, and look at the 4 hour candles. They came down, come in. So when those 4 hour candles come down in here, they might transact in that daily zone, right? So 4 hour traders might be waiting in there for swing trades. If you're an hourly trader, like you might be also waiting in there. Look at where the hourly candles came in, back up. So anything. Me as a 5-minute trader, I'm waiting for 5-minute volume to come in there, and I will be trading out of there. But I know when I'm buying or selling in there, I'm buying with the bigger daily traders. So when I'm looking just for a 50-point move or 30-point move, I know that these daily traders with their volume, they can move 100, 200, 300, 500 pips a day. So I'm like a little vulture. I'm just looking for a few little pips in there, like some breadcrumbs, hit my daily goal, and I'm done for the day. So we can do the same exact thing with 5-minute candles. If you find one 5-minute candle that you like this one right here, that's a big bullish candle, right? Came up and started this bullish trend. I can already see that the volume has not came and transacted back into this bullish candle. So that same candle, I could go opening price, closing price. I could find exactly 50% of that big bullish candle. I can see it hasn't traded in here. There's that 4198. So it's right below psychological 4200. And if I find the point of control, exact same thing of that 5-minute candle, then I set an alert with that red line, add an alert. Whenever it comes down there, I'm ready. So gold is not ready to come down there yet. You can see it. Still see it's building higher low, still building support off here and might continue to drive back up. Okay, so that's it, guys. You know, hopefully you guys are continue to learn this stuff, and it works for all time frames, works for all securities, works for any session. This is probably one of the easiest strategies you can learn. Like, we should be teaching this to our kids instead of playing video games all day, because it could potentially change their lives as they get older in this tough economy that we got going on right now. So I will be teaching my kids this. I teach them. Hopefully maybe you guys can teach yourself and teach your kids this stuff too. And don't teach them how much money they can make and things like that, but just teach them how to identify what a bullish candle is, a bearish candle, which ones have more volume, which ones are the ones to accurately maybe dissect those things. Like, make it like a video game for them, okay? And they will learn. And The purple line represents the high and the low of the day. Oh, this purple line is a 200 EMA, if that's what you're asking. This green line is a 9 EMA. This is the 200 EMA. But when you see a purple lines on my chart, it represents the high and the low of the day. So if I was on the daily and I was looking at today's daily candle, which we already did. Sorry, I eliminated I erased everything. But see the opening balance? Today's daily candle is still a bullish ignited candle. After everything we went through, it's still bullish ignited for 202 holding. And if I have the high, we're trading again right back at the highest point for 214. So that's what I was saying. If we continue to drive up, I would be watching, like, cut that big black candle in half, and we already did it. It was 42.20, and then your next daily point of interest is right here, where this daily candle closed and this one opened. There's your yellow point of interest. Then if it continues to fill that wick, then yesterday's fresh high. That's your next kind of point of interest right there. Those would be what I would be looking for to continue to drive up bullish today. 42.30, 42.40. If you're more like me, more of an intraday trader, what you can do is you can cut zones too, not just cutting candles. This is, guys, I'm going to go a little overtime right now. So you see this yellow line and this purple line? We don't always just have to cut candles in half, but you can cut lines in half. Like, I'm going to blow your brains right here. So take this yellow line to the purple line. And then I know that that's more of an intraday hourly line, so I'm going to place a white line in there. Then I've cut that. So I know as a 5-minute trader that maybe if it breaks today's daily high, it might just come right up to there and get rejected back down. But that might be good enough for me as a scalper to trade from the purple, 216, to the white line, 224. 16 and 24 is 8. $8 move in gold is 80 pips. So I know that that's 80 pips or 800 points in futures. So that could be my daily goal. That could be exactly what I'm looking for. All I'm looking for are the 5-minute candles. If I go back to the 5-minute chart right here, see how they're building? There's the purple line and the white line. I'm just looking for those 5-minute candles to just come and fill like they just did right over here, where they went down and they filled right up. Look at right to that white line, and then they went right back down. So maybe tonight, the 5-minute candles are going to continue to close up here, retest this, maybe build here, drive up to that white line. That's it. I've met my daily goal. I could be done because it could come tumbling right back down. But that's it. I'm trading from this line to that line. And then if it continues to go up, you're targeting there. But for me, that's perfect. I normally just have 50 pip, 30 pip zones. 80 is opening it up due to the volume. But that's what you guys can be looking for. This is horrible volume right now. So you guys all have to agree with me. This is something that could put you to sleep. Bearish, bullish, bearish, bullish, bearish. This is absolutely the worst type of volume right now. We can all say this together. This is horrible. Avoid this at all costs and just trade nice trending volume, okay? And this is probably not the time to be trading, but hopefully a little bit of education helps you guys too. And guys, I got to get out of here because I got to help the little man out. But I appreciate everyone. Timmy, you got trapped in a sell still in. It's still, you got sellers. So all you need, Tim, is a nice solid black candle to close below this 200 EMA because it's kind of acting as the support here, that candle light. So if you get a nice black candle closing below here, it could come up, and then I guarantee you that this is support, this could be the resistance, and then that's what that could be your flush right there coming back down. So you're still live, like it's not really moving anywhere. Buyers and sellers are still accumulating in this really shitty area here, but it's kind of like a coin flip, who could take it. But if I had to go with a pattern, it came up and then came back down and could come up. So what we're looking for is just that second drop right there. Close and then get that push. But every time the sellers are pushing down, those nasty buyers keep bringing it up. I know it's frustrating. I know it's annoying. But sometimes when the volume trades like this, there's nothing that we can do. Just we've got to manage our risk. That's about it. But it is tough for everyone here. So even sellers are getting frustrated. Even buyers coming up and then it goes down. Buyers come up, it goes down. Buyers come up, then it goes down again. Buyers come up. So it's frustrating for both sides. The market loves this because it's accumulating buyers, it's accumulating sellers. It's just collecting as much liquidity as it can before it eventually breaks out. And it's got two directions. It'll either do this to the sell side. If buyers accumulate more, it's going to break the daily high, potentially either be, option one, a fake out up there, or a close, retest this, and then we're driving a little higher up to there. So that's unfortunate what can happen, guys. But, things like this happen. The other thing that you can do, Timmy, is if you are in a sell and you see it's not coinciding with your bias, then you kind of don't always have to wait for it to hit your stop loss. Like you can do like what I did yesterday. I just manually exited the trade. I lost 25 pips as opposed to losing 50. I had enough of the trade. It wasn't meeting my requirement. It was kind of like similar setup. I was in a sell and it wasn't closing below, and then I just canceled the trade and exited myself and went on with my day. So sometimes you're going to have to make those executive decisions. You don't always have to wait for the trade to either TP or hit your stop loss. You got to make your own executive decisions while you're in the trade and think about it. How much can you withstand? Because this is kind of psychologically draining. Just watching this, like just play ping pong all night here. So it's part of the game of trading, guys. That's why sometimes we get caught in this type of volume. But the other thing that we can do to control this is managing our risk at the end of the day. That's about it, guys. Thank you, guys. I hope you guys have a good evening. Get some rest. I know it's late for some of you guys around the world, but we'll see you guys tomorrow morning, and have a fantastic day, guys. Thank you guys so much. Hit the likes on YouTube. If you guys can, if you haven't, subscribe to the channel, join our free Telegram, and or join the team at Stock Sniper Trading, and we'd love to have you guys on the team. So thank you guys so much, and then we can get to know you guys a little bit better. But if you still want to stay on YouTube, you're welcome to. We're here every day with you guys as well. Okay, thanks, guys. Have a good night. Enjoy the rest of your evening. Thanks, everyone. Have a good night, guys. Rob, take care, guys. Timmy, have a good night. You gotta drill it into what nationality is that will help me. Shay, perfect. Shay is all right.
Hey guys, good morning. Welcome to the live session of Stock Sniper Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.